the only month of the year that he had custody of his son, so he'll forfeit at least $1 million in salary. The Knicks coaching search will reportedly include Jason Kidd, Hall of Fame player, currently a Lakers assistant. He used to be the head coach in Milwaukee, said to have a strong relationship with Giannis Antetokounmpo, who can be a free agent after next season. The PGA Tour is going to start letting some fans in next month in Ohio, but it was announced that the PGA Championship, to be played in August in San Francisco, will be without any fans. John Stashauer, Bloomberg Sports. Nathan.
Thank you, John. Equality in the office and the boardroom was one of several topics at day one of the Bloomberg Invest Global Conference. Ariel Investments founder John Rogers addressed generational wealth disparities between black and white Americans and discussed just how little progress has been made on that front in the past 4 decades. He spoke at the virtual conference with Bloomberg New York Deputy Bureau Chief Shartia Brantley. Let's hear what he had to say.
We've been going backwards the last 40 years or so. That is one of the key things that I think that people really don't understand, is how much worse it is for African Americans than we were 40 years ago. So we've got to figure out a way to make a dent in that problem. And the way that I think we have to do it is we have to have more black business leaders in corporate America, but we also have to have more black successful African American entrepreneurs. Because growing up here in Chicago, when we had George Johnson running Afro Sheen and Ultra Sheen, and John Johnson running Ebony and Jet magazine, they were role models for folks. They hired hundreds of thousands of people. They created enormous philanthropy for our community and political empowerment for our community. We have to go back. If we want to get multi-generational wealth, we've got to have more black business leaders and more black successful entrepreneurs of scale.
We only have 4 black men serving as CEOs of Fortune 500 companies and not a single black woman. So how do we begin to enter those spaces?
If you have successful African-American business leaders and entrepreneurs, the next generation of black business leaders will come along after them. You know, it's interesting. George Johnson's son, Eric, runs the largest black company in Chicago that's a supplier to McDonald's. So decisions that were made to create opportunities for entrepreneurs a generation ago have brought together a new generation of successful entrepreneurs. That's something that's important. But it's also critically important that we get African Americans who are on corporate boards and progressive leaders that are on corporate boards to hold their management teams accountable for diversity and inclusion. Tie it directly to their pay, have a Rooney rule when it comes to hiring, and make sure that when you're in that boardroom, you're confident and comfortable bringing up social justice and economic justice issues when you're in the boardroom. The civil rights agenda often gets left out if you're not courageous enough to go out and speak truth to power and tell the leadership of these corporations that they have to live up to the commitments they've made around diversity and inclusion. Not just talk a good game, but really execute.
John Rogers is founder of Ariel Investments and one of the most senior black executives in the fund industry. He says corporate leaders have been reaching out to him asking for advice and are serious about change. And now, as he said, it is time to execute. Rogers was one of several executives and corporate leaders at day one of the Bloomberg Invest Global Conference. And it continues today with conversations from Treasury Secretary Steven Mnuchin to Carlyle CEO Q-Sung Lee and PIMCO's Chief Executive Officer Manny Roman. You can catch what they have to say starting at 1 p.m. Wall Street time. You can listen in on Bloomberg Radio or watch those conversations on Bloomberg Television. Ahead of all that, futures pointing to a higher open on Wall Street this Tuesday morning with S&P futures up 25 points now. Dow futures higher by 230. NASDAQ futures a gain of 67 points. European stocks surging this morning as well after some positive PMI data. The DAX in Germany is higher by 2.6%. The CAC in Paris up 1.6%. 10-year down 4/30 seconds. The yield on a 10-year Treasury 0.72%. You're listening to Bloomberg Daybreak.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
For the Jewish Communal Fund, Noel Spiegel, former senior partner with Deloitte & Touche and past JCF president, discusses the advantages of a donor-advised fund over a private foundation.
There's a lot involved in having a private foundation. You need to engage attorneys, you need to engage accountants, file tax returns. At JCF, all of that is done for you. You don't have to get involved in anything other than making your contribution to your fund and then determining which grants that you want to make.
A JCF fund may be opened with a minimum $5,000 contribution of cash or appreciated securities and can be used as an alternative to or together with a private foundation.
If you have a foundation, you have to list all of the contributions that you made. Potentially anybody, because the information is public, can find out exactly which organizations a foundation has made charitable contributions to.
Let JCF simplify your philanthropy and protect your privacy. Learn more about JCF's private client group at jcfny.org.
This is a Bloomberg.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Tuesday morning by the scruff of the neck. Take this sunshine as an omen and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
You know that feeling when you get more than you expected? Like when your week off is forecast warm and sunny. Or when there's an extra unclaimed sausage left on the barbecue. Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage. Yeah, that feeling. Nice, isn't it? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
At Honda, we've never looked to other car companies for inspiration. No, it's not a matter of an inflated ego. We just prefer listening to what people really need. For example, the new Honda Jazz Hybrid doesn't have the expected 6 airbags. It has 10, including one that prevents the driver and passenger from colliding with each other. And because we also listen to our conscience, all our safety features come as standard. No charge. Honda, the power of dreams.
When you buy tech online and you want to make sure you get exactly what you need, would you rather talk to a robot or to someone called Robert or Ethan or Kai or Rachel or one of our other tech experts on Shop Live, Curry's PC World's online video call experience?
Hey, I'm Ali. How can I help?
Isn't it nice to get expert advice from another human being before you buy? They're just a click away. Curry's PC World. Talk to our tech experts online with Shop Live.
And financial information 24 hours a day. Powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Radio. Now, a global news update.
The White House says it's preparing for a second wave of coronavirus.
23 states are seeing week-to-week hikes in new COVID-19 cases. The new hotspots are in the South and in the West, including Arizona. Phoenix Mayor Kate Gallego.
Our hospital beds have about 17% left in capacity. We are in a crisis situation.
President Trump is scheduled to appear in Arizona on Tuesday. He'll commemorate the installation of the 200th mile of new border wall. I'm John Lawrence.
A new study from Penn State estimates that the number of early COVID-19 cases in the U.S. may have been doubled nearly twice as fast as originally believed. Correspondent Athena Jones.
Based on a huge spike in doctors' visits for influenza-like symptoms, researchers say that as many as 8.7 million Americans contracted the virus in March and that 80% of them were never diagnosed.
On Wall Street, Dow futures are higher. I'm John Trout.
It's a new disease making an unprecedented impact.
The job losses were widespread.
It is a stunningly historic moment.
Your best strategy?
Is this a market that's accepted reality?
Bloomberg Surveillance, weekday mornings at 7 Eastern on Bloomberg Radio. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. And U.S. stock index futures are gaining along with stocks in Europe after President Trump reassured investors that the trade deal with China remains in place. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 24 points, Dow futures up 224, NASDAQ futures up 65. The DAX in Germany up 2.6%. 10-year Treasury down 3/32, yield 0.71%. The yield on the 2-year 0.19%. NYMEX crude oil up 1.6% or 66 cents at $41.39 a barrel. COMEX gold is up 0.1% or $2.40 at $17.68.80 an ounce. The euro 1.1286 against the dollar. British pound 1.2458 and the yen 107.08. And that's a Bloomberg Business Flash. Now here's Amy Morris with more on what's going on around the world. Amy.
Karen, good morning. About 1.8 million New Yorkers requested absentee ballots for today's primary. There will be some polling places open, far fewer than usual. You need to get your ballot postmarked by today. 2 more members of President Trump's campaign staff who worked on his rally in Tulsa have tested positive for coronavirus. They've both been put in quarantine. Contact tracing is underway. And law enforcement in D.C. shot a pepper spray-like substance and pushed protesters away from a statue of Andrew Jackson near the White House. Demonstrators were trying to tear that statue down because of Jackson's role in removing American Indians from their ancestral lands. That statue is still standing. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg. Nathan.
Amy, we are live from the Bloomberg Interactive Brokers studios. We're at 648 on Wall Street, and time now to check what's going on in D.C. Some of the top stories in the nation's capital include President Trump saying the trade deal with China is, quote, fully intact. He put that on Twitter after comments from Peter Navarro put it in doubt and sent futures sinking overnight. President ordering a freeze on many work visas through the end of the year, and the University of Michigan pulling out of hosting the second presidential debate in October due to coronavirus concerns. Also making news, President Trump heads back out on the campaign trail after a disappointing turnout in Tulsa. For more on this, we turn to Bloomberg News politics editor Kathleen Hunter. And I do want to get to that, Kate, but first, I got to report some tweets that the president just put out, and they're sort of related to something Amy Morris just mentioned in the news about that attempt to take down the Andrew Jackson statue outside the White House. The president writing, quote, I have authorized the federal government to arrest anyone who vandalizes or destroys any monument, statue, or other such federal property in the U.S. with up to 10 years in prison per the Veterans Memorial Preservation Act or other such laws that may be pertinent. That was just put out moments ago on Twitter by President Trump. And it's very interesting when you think about the reaction to the president after that crackdown on protesters outside the White House a couple of weeks ago before the photo op. This could be reviving some of that concern, perhaps.
Absolutely. And I think that, that's a good analogy to make there is looking back at, that walk that the president took across, Lafayette Park to the church several weeks ago. That became kind of an iconic moment. And I think that this is a similar type of, reach out to his base or a segment of his base that, is unhappy with some of these statues that are coming down or attempts to vandalize statues. And but the risk here is that there's another group of folks who are supportive of what's going on. And so I think that this, again, kind of puts Trump out there in a very specific way on this issue. And I think that it has the potential to, potentially backfire on it.
It's interesting that the president consistently goes back toward appealing to his base. Think of that when you look at the turnout at the rally in Tulsa just a few days ago, perhaps pointing to evidence that the base might not be as big a silent majority as the president thinks, or is it just concern about protesters potentially getting into conflict with some members of the president's base? How do you see this playing out as we head forward into the campaign?
Well, I think it'll be really interesting to see today, what kind of reception Trump gets when he goes to Arizona. And he really can't afford coming on the heels of his visit to Tulsa. That was, that was basically considered a flop given the lack of attendance and how much that the White House seemed to be caught off guard by that lack of attendance. So I think they're trying to sort of reset the table today with this visit to Arizona. And I think, people are going to be watching it very closely to see how successful they are at doing that. This is in some ways more familiar territory for Trump because it's obviously a border state. He plans to talk about the border, talk about his administration's efforts to curb illegal immigration and build the wall that he very much promised and, campaigned around in 2016. So this is a potential reset moment, I think, for Trump, but the stakes are pretty high. If it doesn't go well, or if he doesn't come off well there, I think then, that could have some dramatic repercussions and kind of keep him on this, sort of track that he's been on since Saturday of negative news about his campaign.
And it is fascinating that he chooses Arizona as a venue to continue his campaign with a focus on immigration, perhaps giving him another opportunity to appeal to his base.
Yeah, absolutely. And, that is certainly an issue that he keeps coming back to. There, are kind of these core Donald Trump issues, illegal immigration or immigration. We saw him yesterday sign an order dealing with work visas and, temporarily halting those, and also with, green cards through the end of the year. There's also obviously the China trade issue, which is one that he repeatedly comes back to. And, as well, then, he does talk about issues of race. That's one that he comes back to time and again when he's looking to energize his base.
And it comes at a time where the president has been gradually sinking in the polls compared to his Democratic challenger, Joe Biden. Is he in a situation right now where he feels like his back is against the wall? What are people inside the White House and inside the Trump campaign saying right now?
Well, I think there's a pretty clear sense that if the election were held today, Trump would be in deep trouble. The thing is, though, the election obviously isn't going to be held today. It's not going to be held for another, 4.5 months. And a lot can happen in those months. And I think that question there is, what's going on with the economy on Election Day? Is Trump able to kind of rebound from some of these crises? We've seen him rebound from, everything from impeachment to, the various other, his administration, he kind of thrives off of these, repeated and chains of crises. And he seems to always kind of be a little bit Teflon when it comes to it and be able to kind of rebound. So the degree to which he's able to do that, and also how Joe Biden performs. There's another candidate in the race. These types of elections tend to be referendums on the sitting president, but, Joe Biden can do things to either better his situation or worsen it. And I think we don't know how all of that's going to play out over the next 4 months yet.
Well, what is the indication from the Joe Biden campaign about how it plans to strategize with the president in this position right now?
Well, I think when it comes to Biden's campaign, the things that he can focus on are, Trump is, polling people are not generally pleased overall with Trump's response to the coronavirus, with where the economy is, with the direction that the country's heading. And Joe Biden has an opportunity to capitalize on all those things. Whether he's able to do that still is a bit of an open question. It's tricky because, this isn't a normal campaign season. He can't be out there on the trail in the way that, candidates typically are at this stage. And so, there are some hindrances that Joe Biden is going to have to deal with. But, I think that there are definitely some opportunities here that he could draw upon.
In our last 30 seconds here, there's a report in the Washington Post this morning that President Trump is leaning toward another round of stimulus checks to Americans as part of next round of stimulus package. That could set him up potentially with some friction with some of his fellow Republicans.
Yeah, that's a tricky issue within the GOP. There's a lot of conservative Republicans that don't really like the idea, philosophically of handing out essentially free money. They have, deficit concerns. And so kind of the deficit hawk faction of the Republican Party might not look so favorably upon that, but it certainly is something that I think, makes sense in Trump's head as an idea that he would support. So the question is really how far the White House and or Trump are willing to push that, and if they're going to really make that something they want to really go for.
Thanks for all this, Kate. Really appreciate it. That's Bloomberg politics editor Kathleen Hunter. Karen.
All right, Nathan, thank you. It is 6:56 on Wall Street. Time for the Bloomberg NJIT STEM report, brought to you by New Jersey Institute of Technology, providing industry partners with commercially focused research and innovation services through its New Jersey Innovation Institute. Learn more at njii.com. Now let's see what's happening in science, technology, engineering, and math. Archaeologists say they discovered a major prehistoric monument under the earth near Stonehenge that could shed new light on the origins of the mystical Sickle Stone Circle in southwestern England. Experts from a group of British universities say the site consists of at least 20 huge shafts, more than 32 feet in diameter and 16 feet deep, forming a circle more than 1.2 miles in diameter. Researchers say the shafts appear to have been dug around 4,500 years ago. Apple introduced a new set of features for its smartwatch, adding sleep tracking, an updated fitness app, and the ability to track hand-washing sessions. The new function lets the Apple Watch monitor a wearer's sleep patterns and quality of sleep. The new hand-washing monitor tells users how long they should wash hands, and the redesigned fitness app can track dancing and core training workouts. And more than 1,600 Google employees are demanding the company quit working with police. They want CEO Sundar Pichai to end the sale of the company's technology to law enforcement. Staff said that would provide action to reinforcement statements against police brutality. And that's today's Bloomberg NJIT STEM report. Futures this morning higher. S&P futures up 24 points. Dow futures up 234. NASDAQ futures up 65. And Bloomberg surveillance is straight ahead with Tom Keene, Jonathan Farrell, and Lisa Abramowitz. For Nathan Hager, I'm Karen Moscow, and this is Bloomberg.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Tuesday morning by the scruff of the neck. Take this sunshine as an omen and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
At Halfords, we're here to get you where you want to be. We fit car tyres for over 500,000 customers every year. We could fit yours at one of over 350 garages, or even on your driveway with our mobile experts, which means you can safely hit the road again and surprise that special someone.
Happy birthday!
From tyre fittings to MOTs, there really is no job too big or too small. Halfords, for life's journeys.
At Honda, we've never looked to other car companies for inspiration. No, it's not a matter of an inflated ego. We just prefer listening to what people really need. For example, the new Honda Jazz Hybrid doesn't have the expected 6 airbags. It has 10, including one that prevents the driver and passenger from colliding with each other. And because we also listen to our conscience, all our safety features come as standard. No charge. Honda, the power of dreams.
World 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
What we need to realize is that, we're going to be in a slow growth world for a very long period of time.
Trade is very much on the back foot, and of course there's a lot of negative consequences that come from that.
We've come to a point where we realize that the economy and the virus have to coexist. We can't choose one or the other.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning. This is Bloomberg Surveillance with equity futures nicely positive. We're live on Bloomberg TV and on Bloomberg Radio. Alongside Tom Keene, I'm Jonathan Farrow, together with Lisa Abramowitz. This is Bloomberg. Tom Keene, confusion over the relationship between China and the United States, and it got a whole lot more confusing overnight.
You read it in the text, and there it is, but you listen to Martha McCallum's interview on Fox with Dr. Navarro, and it's stunning. The curtness of his response and what that did to markets. And of course, backtrack, John, as you well know, by not only Dr. Navarro, but the President of the United States, into green on the screen right now. You're going to do a data check in a moment. I'll have the appropriate crowd noise behind that data check. But John, what's extraordinary to me is you still got a bid to the market, even within the quiet.
Hey, Tom, spare us the crowd noise when I do the market check. Futures with a massive bounce overnight off the back of this. Peter Navarro saying that the trade agreement was over. The president, his boss, correcting him pretty quickly. Lisa Abramowitz, the other big focus for this market, the so-called fiscal cliff, a different kind of fiscal cliff going into July. What will happen with the fiscal stimulus that we got a couple of months ago, and what will this administration do in the next 30 days?
Yeah, President Trump coming out in a Washington Post article came out a little bit ago saying that he does perhaps support that $1,200 additional stimulus check to be sent out. The White House has yet to take an official position. There is a question, though, in an election season, the balance of risks that come into play. President Trump heading down to Arizona in his latest bid to try to rejuvenate his campaign. They're going to be talking about the border wall. That's one thing we're watching. He's departing the White House at 9 a.m. Also, other things we're watching today, 9:45 a.m., we're going to get U.S. June PMIs. This follows better expected manufacturing data out of Europe. And then at 2:30 p.m., there is a Senate panel hearing on China's culpability for the pandemic. This just speaks to the growing wall of worry, John. And I think that this, especially heading into the election season, we're going to see more of these trade tensions and protectionist policies adding to a wall of worry that right now traders are betting the Fed can surmount with an endless stream of liquidity.
But the China story is a subject that's keeping this market on edge. And Lisa, we saw that overnight. Equity futures gapping lower, then really whipsawing back. Equity futures right now up 21, positive 0.7% of the S&P 500. The bear capitulates. Jonathan Golub of Credit Suisse moves his price target from 2,700 to 3,200. I'm not sure if he'll like that characterization, so we'll let John tell his own story. He joins us now. Jonathan, good morning. Let's start with a short one. Why?
Well, I mean, if there's a simple story here, it's not that I think that the economy is going to be magnificently better. It's that the fact that we've taken out these downside risks, all of these government actions have eliminated or at least diminished the potential for this thing to double dip down to the levels that we've seen before. So I think that the upside, when we were calling for about 3% upside through year end, I think the upside has been limited, but the risk to the downside has been. And John, you and I were talking about before we went live, that the single chart that's important to me, on your Bloomberg terminal, you can see the number of bankruptcies that have been filed. And if you go to max on that to see it, including the downturn in 08-09, that during big recessions, you see a massive spike in bankruptcies. And that is not happening here at all. Businesses are not going under because of all these actions, and that's one of the reasons why I think that we're not going to double dip, even if the upside is not there.
Another reason why the next 30 days is so important on the policy front. What do you need to see, John?
I think that you're 100% right. There's two big issues I think that are important. This PPP program, this is the money that's going to small businesses to keep them afloat. That rolls off at the beginning of July. And then you have this government supplement of the $600 a month that's going to people who are unemployed. And both of those are rolling off in the month of July, the unemployment running at the end of the month. Those are going to be a real political football. And if they are not rolled over and we see the consumer wallet, it takes a hit, that is going to be a real big problem for the economy near term. And the market will absolutely not take that well. The problem is that Congress is not going to be debating these issues until sometime in July. So we're going to feel pretty uncomfortable about these before it gets resolved one way or another.
John Golub, I'm going to cut you some major slack on, the cheap shots the media's taken on. He was bearish and now he's bullish and all that. But what I'm fascinated by is what would be the next tranche of optimism from you? Where's it come on the income statement? Does it come from revenue growth doing better, or is it corporations adapting to this pandemic, to this economic crisis, and they make margins better? Which is it to get you to the next tranche of optimism?
if you're asking what would make me, if we were to be talking in 6 months from now, and you were to say this is what happened that's going to make this the upside much more, it's not going to be this more liquidity, because I think that we've already seen the market's response. The question is, how quickly do we get back to an economy that's running at 100%? And so let's ask the question, when is it that commuters are comfortable going back into New York again? When is it that we're comfortable getting on airplanes again? When is it that we can get over 20 million people that have been unemployed back to work? And the answer to each of those is longer than you would think. So the worst case is out. The improvement sequentially off the bottom, we know that that's going to be good. The PMIs this morning are going to be good. The question is, if you're looking up at the sky, not down at where you were when we were staying at home, that's what's going to really drive the market.
What do the banks do here? You do a great sector analysis. Where are you on the financials?
Yeah, when I was speaking to Susan Katsky, who's our bank analyst, is terrific. I mean, one of the challenges, first of all, the good news is if the economy is going pretty well, the credit losses probably don't end up being as bad as we all think, and that's a positive story. On the other hand, net interest margins for banks are a problem longer term if you have really low interest rates. So the banks, I think, are going to be a little bit more challenging. Here's the key: different than the last crisis, banks are not going to need to raise dilutive capital. There's not going to be a re-regulation environment. All the really ugly stuff that happened is not there. The question is what does their profit model look like in a lower rate environment, especially one where economic growth longer term may be a little bit weaker.
When you talk about credit losses being mitigated by the fact that we're probably not going to get shutdowns and that the stimulus has mitigated the worst case scenario, I'm wondering what the increase in virus counts in places like Texas, where the governor's come out and said that it's unacceptable how quickly it's spreading and the potential for additional shutdowns, how that factors into your thesis. Is that factored in, or do you think that that's a bear case that is sort of an outlier at this point?
No, Lisa, we are obsessing on this issue, and so my team just ran some numbers last night, and what they found was that first of all, two things are happening. The number of cases is spiking primarily in the southern half of the U.S. and California, and in the north, the number of new cases continues to fall. However, the deaths are not going up anywhere, or let's say anywhere, in any of the major regions. So even in areas where the case count is going up, and a lot of people are saying is, yes, but that's a delay and it's going to happen later. We don't think so. What you're finding is that the people who are getting sick now are younger people who are going out because they're not concerned about the downsides of getting the virus. And so the people who are getting sick are not showing up in intensive care units or at the hospital, and they're not dying. So it's very possible that we're seeing, or not very possible, I think what we're seeing is pretty rational behavior. People who know that they could survive this are going out, they're living their lives, they're getting sick, but not in a way that's going to be, that's going to cause another shutdown. And this is what it's going to feel like in an environment where we're going to have to live with this for a long period of time. So I think that anything which looks like a national shutdown, could we see individual local markets or city or region for a very short time? Maybe, but even that, I don't think it's going to happen. If we did go and see a shutdown, that's obviously a really big problem. But I think that I don't think these numbers are inconsistent with each other.
Jonathan Golub of Credit Suisse. John, appreciate your honesty, transparency, and your time this morning. Send our best to the team over at Credit Suisse. Jonathan Golub of Credit Suisse. Lisa, you're picking up on an important, subtle shift in the last 24 hours, with Texas Governor Greg Abbott suggesting that the tolerance to carry on reopening is being tested. In his words, if those spikes continue, additional measures are going to be necessary. It's just a little bit of a shift in the last 24 hours, Lisa, and a huge focus on something that's very important. What will the tolerance of policymakers be as they continue to push forward with reopening plans?
Yeah, and at one point you've got shutdowns not happening, and in fact, Texas continuing its reopening process even as they see this spike in cases. On the other, we talked about this yesterday with Apple stores closing. Companies are going to respond. Consumers are going to respond. How do you price that in? And I just, that is going to be a huge social study going forward for everyone in the soft data, John.
Yeah, Tom, we go back to a question that we asked 24 hours ago on this program. Are these inevitable bumps in the road, or are we seeing an inflection point build, which is going to throw this recovery way off course?
Well, I'll bring it around, John, to what Lisa mentioned at the top, and I spent a lot of time today looking at the log per capita state virus statistics, and I'll be honest, John, they're grim. I mean, some of the southern states on a rate of change per capita basis are like New York and New Jersey were 8, 9, 10 weeks ago. But, John, I'm going to tell you, I was out yesterday across Midtown New York, and it was dead. Just Lisa's point, do people really want to go back to the office like John Farrow wants to go back to the office?
The conversation continues a little bit later this morning. We'll catch up with St. Louis Fed President Jim Bullard on this program, 8:30 Eastern, live on Bloomberg TV and on Bloomberg Radio. From New York City this morning, good morning. This is Bloomberg.
Now let's see what else is going on around the world. Here with the latest headlines is Amy Morris. Good morning, Amy.
Good morning, Tom. President Trump tweeting this morning that he has authorized the federal government to arrest anyone who vandalizes or destroys any, quote, monument, statue, or other such federal property in the U.S. with up to 10 years in prison. This as protesters and demonstrators have been targeting statues of Confederate generals, explorers like Christopher Columbus, and just last night, demonstrators tried to tear down a statue of Andrew Jackson near the White House. President Trump has also signed an order that temporarily halts access to several employment-based visas, including H-1B and H-4 visas, as well as L visas and J visas. These are for work and study abroad programs through the end of the year. The move impacts technology workers, students, and au pairs. The technology industry says the move would hurt the economy. Green cards also frozen until the end of this year. The Real Clear Politics average of general election polls finds Joe Biden with a commanding lead, growing to 9.5 points. A similar polling average from 538 puts Biden ahead by 9.2 points, leading President Trump in every battleground state. The nation's health officials preparing for a flu season complicated by a coronavirus pandemic. Federal health experts, including Drs. Anthony Fauci, Robert Redfield, and Stephen Hahn, will testify about this on Capitol Hill today. And now comes word that 2 more members of the Trump campaign staff who worked on his rally in Tulsa have tested positive for the coronavirus. Live from the Bloomberg Interactive Brokers studios, this is Global News 24 hours a day on air and on Quick Take by Bloomberg. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing, LLC. Member FINRA, NYSE, SIPC.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's BABBEL.com.
Influential conversation.
If you can build that flat-pack wardrobe without looking at the instructions, you've still got it. If you can manage 5 keepy uppies on your first go, you've without question still got it. If you can toss a pancake to the ceiling and not let it hit the floor, surely you've still got it. And if you can just about fit into those jeans you bought 5 years ago, you've definitely still got it. Brute, still got it.
At Honda, we believe in our ears. Listening can help solve some of life's biggest conundrums. For example, if a car breaks down and there's no one around to hear it, does it make a sound? The answer is yes. The new Jazz Hybrid will pinpoint your location automatically and send for help at the tap of a button. And with its personal assistant, you can find the answers to other conundrums like, where is a good vegan gluten-free pizza place with free parking? The new Honda Jazz. Hybrid and connected. Honda. The power of dreams. Connectivity subscription available in selected grades.
When you buy tech online and you want to make sure you get exactly what you need, would you rather talk to a computer or to someone called Colin or Priya or Lewis or Zoe or one of our other tech experts on Shop Live, Curry's PC World's online video call experience?
Hey, I'm Ali. How can I help?
Isn't it nice to get expert advice from another human being before you buy? They're just a click away. Curry's PC World. Talk to our tech experts online with Shop Live.
You know, do you think that the president he obviously really wanted to hang on to this trade deal as much as possible, and he wanted them to make good on the promises because there had been progress made on that trade deal. But given everything that's happened and all the things you just listed, is that over?
It's over, yes.
Long question, short answer on Fox News with Peter Navarro. Enough to shake this market. Equity futures off the back of that down hard, then bouncing back as the president suggests it's not over. The phase 1 trade deal is, quote, fully intact. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz on Bloomberg TV and on Bloomberg Radio. This is Bloomberg Surveillance. Here's the state of play right now in this equity market right now. Futures up 24 on the S&P 500. We're doing better than good, up 0.8% almost. Outside of that in the bond market, Treasury yields just a little bit higher. The curve a little bit steeper, up 3 basis points on 30s, on 10s. Call it 2 basis points higher to 0.72%. And in foreign exchange, the dollar weakness continues. That's your story there. The euro stronger by a couple of tenths of 1%. But the confusion overnight, Tom Keene, carries through to this morning. A very long question, a very short answer, just signalling how much this market is still on edge somewhat over this story.
Well, let me ask a very short question, John Farrow, to Kevin Cirilli, our chief Washington correspondent. Kevin, how does Dr. Navarro fit into the mix at the White House? I know John wants to jump in here, but fit in where Navarro is in the pantheon of Trump advisors.
He's from the Steve Bannon-esque wing of the Republican economic ideology, particularly on U.S.-China trade relations. Now, Navarro pushing or clarifying his remarks to Fox in a statement following that appearance, saying that he was not suggesting that the U.S.-China trade deal was off the table. The president, for his part, tweeting out a clarification as well. Look, in terms of agricultural products, this is incredibly important. Look no further than Arkansas's 3rd congressional district, where that Tyson's plant has been the really ground zero for trade right now, as China has backed off of agricultural purchases coming from that particular Tyson's plant. And that really is why Republicans are nervous about the leverage that Xi Jinping might have in the 2020 election for heartland states.
Kevin, this is really difficult for the administration going into November. Can they simultaneously be hawkish on China and shore up this economy at the same time?
Well, the administration has said, as you know, Jonathan, from your conversations as well with administration officials, that they have been trying to successfully divorce the China trade talks from the larger issues that the United States has with China on intellectual property, as well as a host of other issues. And we should note that it's not just China that is looking at political leverage in the U.S. heartland right now. There are a series of European trade decisions that are going to likely be impacting markets in the second half of this summer, and Europe also now eyeing leverage in terms of various different agriculture and seafood industries. So in terms of the politics of this, it is really wrapped up in trade, and it could have long-lasting political implications heading into November.
Next 30 days is critical on the policy side. Let's turn to domestic policy, fiscal stimulus. The president, according to the Washington Post, telling Gage that he'd like to see more stimulus checks sent to Americans. Kevin, where are we, and how important is the next 30 days?
It's massively important, and in fact, there is not Republican unison on the issue as it relates to a next round of economic stimulus. I've been speaking with lawmakers in both parties for the past couple of days in terms of where they are of getting to some type of consensus ahead of the August recess, and quite frankly, there is not that consensus. As states reopen, Republicans are increasingly less likely to get behind another round of helicopter cash and more likely to try to get behind some type of reopening strategy. Now, the president forecasting that he wants to see some type of economic stimulus in the fall around infrastructure, but that close to an election is historically, it has been unlikely for such a massive type of economic fiscal stimulus to be impacted that close to an election.
President Trump, does President Trump still have the power over the Republican Party in order to set the consensus, Kevin?
You know, I think he does, and here's why. I spoke yesterday with a strategist and Kentucky Senator Rand Paul's political orbit, Lisa, who said that they're banking that because the president was not on the ballot in 2018, that's why you saw less turnout amongst Republicans, and that the president on the ballot in November would drive the base turnout for Republicans. However, I would note that there was a Des Moines Register poll out in Iowa, the Hawkeye state, a state that the president carried in 2016, and Senator Joni Ernst, a Republican from Iowa, up for re-election. Teresa Greenfield, a largely political unknown, the Democrat progressive running in that state, is leading Joni Ernst, according to that poll. She's running on a basis of agriculture. She is a small town farmer turned political politician now. So that could be a bellwether in terms of how the Senate will go come November.
Kevin, it's a Tuesday, which means primary voting, and the basic zeitgeist is there's three key races, and Mr. Biden may wake up to progressive or liberal victories of his Democratic Party. How closely will the vice president look at tonight's results?
You know, I think he's going to keep a careful tab on that, but I think largely the vice president's campaign has really decided that they are going to make this a referendum election and not a choice election. Look for the Republicans to try to do everything they can to make it a choice election and not a referendum.
Kevin Cerrilli, down in Washington, D.C. Kevin, appreciate your time this morning.
Thank you.
As Kevin mentioned a little bit earlier this morning, Tom, and I think it is important to recognize this, there are still several areas where the president polls pretty well. One with his own party, the Republicans, his base, still rock solid. The other's on the economy. And obviously a key issue going into November is going to be who is going to be better at handling the economic recovery out of 2020 into 2021. And one of the big challenges, I think, for Vice President Joe Biden and the Democrats is to say it's us, it's him.
Yeah, there's no question about that. And I get the calendar out. Philip Hildenbrand of BlackRock was really good about this morning, John, in that you get to September 30, and then you wait 30 days, and that's October 30-ish, and the election's just a few days later. What is Q3 going to look like, and who does it set up best on that first Tuesday of November?
Elisa, we've mentioned this a few times over the last few weeks. You just read the Southside research, just slowly. It's creeping up higher on the agenda, isn't it?
Yeah, and I wonder how this is going to be factored into the market action. Right now, it seems like the Fed is able to absolutely overwhelm any wall of worry, even though there are bricks being added to it by the day with trade tensions, protectionism, as well as the election, John.
Right now, equities pushing higher, up by 26 points on the S&P 500. We are positive by 8, call it 0.9%. Risk on. A mild move higher in the equity market compared to some of the bigger moves we've seen over the last couple of weeks. In the bond market, Treasury yields higher, the curve steeper. 10's up 2 basis points. On a 10-year yield is 0.73%. On a 30-year, it is 150, up 3 or 4 basis points on a session. 1 hour from now, one of the interviews of the morning on Bloomberg Radio and on Bloomberg TV as we catch up with the St. Louis Fed President Jim Bullard. 8:30 Eastern, 65 minutes away from New York. This is Bloomberg Surveillance.
NJIT, New Jersey Institute of Technology, makes innovation happen. The university helped biomedical engineering professor Tara Alvarez launch a startup that may revolutionize vision therapy.
Our startup through NJIT is called Ocular Motor Technology. We create virtual reality vision therapy in a head-mounted display. So it's gaming, and basically we're sugarcoating the therapy so that children and young adolescents don't even realize they're doing therapy. To accomplish this, we need biomedical engineers, which are here on NJIT campus, computer scientists, artists, people that are into story development, and then we're collaborating with a lot of the large pediatric medical centers. This idea of a startup culture is extremely important to not just NJIT and the National Science Foundation, but also to the U.S. as a societal whole.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
This is Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Tuesday afternoon by the scruff of the neck. Take this sunshine as an omen and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
At Halfords, we're here to get you where you want to be. Why not get road ready with a free car check worth £15 at all our stores and garages? With 25,000 weekly slots available at 700 locations, you can count on us to get you safely back on the road. Or even back beside the seaside. From MOTs to tyre fittings, there's no job too big or too small. Halfords, for life's journeys.
Listen, that's a dream. Everyone has them, jingling away in the back of our minds. And most of the time, that's where dreams stay. So easy to ignore. Anything can drown them out, and everything does. But at Honda, we listen to our dreams. We get right up close. And on really good days, they become reality. From 2022, Honda's mainstream cars will only be hybrid or electric. Honda, the power of dreams.
From New York, this It's Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg TV and on Bloomberg Radio. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz. All three of us getting you in shape for the opening bell 2 hours away in New York City, with equity futures pushing higher, up 26 points on the S&P 500. We are firmer by 0.8%, looking to add some weight to the move higher yesterday. Huge outperformance from big tech once again. The cyclical rotation fading just a little bit. That's a topic for a little bit later in this program. In the bond market, Treasury yields just a bit higher, the curve a bit steeper. Your 10-year yield 0.72%. And in foreign exchange, the euro stronger, euro dollar up by a couple of tenths of 1%. The PMI is out of the Eurozone, Tom. Let's use the following phrase. Things are getting less bad. Things are getting less bad. Still in the 40s on the PMIs, but not as bad as they were a month or so ago.
Yeah. Absolutely true. That's a really nice way of putting it. And I note about an hour ago, Ben Laidler of Tower Hudson put out his micro analysis looking at shipping and freight tonnage. And I think he had the constructive feeling of less bad, which led to a more optimistic equity assessment. Certainly we see that with futures this morning. Right now, she is one of our most wonderful thinkers on economics, going more from market economics as she practiced with the John Hancock Insurance Company over to her proven academics at Princeton and Oxford. Megan Green joins us now from Harvard Kennedy School. And Megan, what's so important is you synthesize the experience of the United Kingdom of that shock of Brexit over the shock that we're all living now with the pandemic. How do we extract ourselves from a pandemic? Is it an act of God and we move quickly, or is it going to be a long and slow process?
Well, unfortunately, I think we're looking at a pretty long, slow, hard slog. The data has bounced pretty quickly in May and June in particular. So some people might be tempted to say, hey, look, this looks like a V-shaped recovery. But getting the first 20% of those who lost their jobs back into the workforce is a lot easier than getting the last 20% back in. And there's a host of downside risks as well, both in Europe and in the U.S. I mean, no one, or the markets, don't seem to have noticed that the number of new COVID-19 cases in the U.S. has gone up by 55% in the past week. I think that's a huge risk that isn't being priced in. We saw confusion over, trade with China and the U.S. also causing jitters in the futures markets. But, there's going to be trade tensions as this election comes closer. Regardless, a hard Brexit is another downside risk, and none of this seems to be priced in.
Megan, and WTO folks out moments ago with, I think, a negative 18% statistic on world trade. We're still checking on that. Megan Green, I look at the slowdown and the bounce back, and what it comes down to is, to use the word, an efficacy of fiscal placement. The great critics of MMT would say you can't do fiscal stimulus in a narrow, concerted manner. Can we prove that this time is the exception? This time is different? We can win with fiscal policy?
Fiscal policy can certainly help here. And as we look at the U.S. stimulus pipeline, it looks like it's drying out, and it will make a huge difference whether we re-up some of that or not in the U.S. But certainly, the more targeted we can make fiscal stimulus, the better. The problem is we mainly have top-down tools, so we've had to provide things like checks that aren't targeted at all. But I'm constantly asked whether we're doing MMT, and MMT isn't really something you do. It's more kind of a school of thought. But I do think, to some degree, what the MMTers get right is that we don't have to raise the money in order to spend it. We can just deficit spend, and that's the obvious answer for any major economies who are facing incredibly low borrowing costs for the foreseeable future, like the UK and the US, and even the Eurozone to some degree. So I think we are right to be deficit spending like mad to try to dig ourselves out of this hole, and to try to fill the hole, first of all, and then to try to prompt a recovery.
And yet, Megan, the policy effort seems to be really lumpy, particularly here in the United States. I caught up with Bridgewater in the last 24 hours. I'll be catching up with Bob Prince tomorrow for the Bloomberg Investment Conference for anyone that wants to watch that. The duration mismatch is something they're focused on. Bob Prince over there mentioning that we keep applying these 3-month Band-Aids to something that could last 18 months and maybe longer. Megan, what do you make of that approach?
I think that's absolutely right. In fact, I don't even think we're applying a 3-month Band-Aid. We've applied a 2-month Band-Aid for the most part in the U.S. for small companies and for those who have been laid off. And I think this is going to be a much longer, harder slog, as I mentioned before. So we're either going to have to keep re-upping it, and investors are going to trust that we're going to keep re-upping it, or there's going to be some kind of market dislocation. And I think there is a problem in politics. We saw it in 2008, 2009, that at a certain point, policymakers start asking questions about how we're going to pay for this. And again, that's a totally inappropriate question to be asking in the middle of it. We can ask it afterwards, how we figure this out. And the answer is deficit spending, particularly for the U.S. But, if we end up having policymakers wringing their hands and refusing to pass more stimulus, then that's going to have a huge impact on our recovery. And I think it will be an even longer, harder slog than it otherwise would have been. And this is why we need automatic stabilizers, I think, to turn programs on and also to make sure they don't get turned off too soon, so that it's not a political process that just happens based on the data. And there's some work being, done on trying to implement automatic stabilizers in the U.S. Europe gets this a bit better than we do here, but hopefully we can build some of those in for the next crisis, even if it's a bit too late for this one.
Well, Megan, what worries me is that there's some policymakers taking their cues from markets right now, because markets are elevated. Some people don't feel the urgency to do more. How instructive is the economic data itself over the last month for policymakers as they try and calibrate what the next move should be?
So to be honest, most of our economic indicators are pretty backwards looking and out of date by the time they come out. But they're already starting to show a bounce. And a lot of the alternative data, high frequency data that we're looking at also shows a bounce. So that takes pressure off of policymakers as well. And as I said, it looks like a V-shaped recovery right now. That was always going to happen. We're always going to have the best growth figures for all kinds of things ever, off of a really, really low bottom. And that will be politicized. So President Trump and the Republicans will highlight how we've got the best growth data ever. The Democrats will highlight that it's from the worst base ever. And both sides will be right. That will be really confusing for people. And I think that will muddle the debate on whether to do more. So I don't actually think the economic data is going to be helping in the short term. But as I said, that quick bounce was inevitable, but it should slow down. It's going to be much harder to pull people into work the longer this goes on.
Megan, you said that the U.S. should be deficit spending like crazy. Should individuals, should corporations be deficit spending like crazy? Because they're borrowing a ton. And there's a question, is this just prolonging the pain that is inevitable anyway?
So no, sovereigns are different from households and companies in that they never die. They never actually have to pay that debt back. They don't usually pay that debt back. They just roll it over for years and years and years, and households and companies can't do that. So the same rules don't apply. That we have seen record corporate debt issuance, and could that be a problem coming down the line? Absolutely. We started this off with a bit of a bubble in corporate debt. At some point that will come home to roost, but not while rates are going to be pretty much at zero for the foreseeable future. I think that pushes that problem further out into the future.
If the U.S. doesn't continue fiscal stimulus with additional rounds of checks and re-upped enhanced unemployment benefits, could we see this come home to roost sooner? In other words, could this bubble pop in a way that becomes problematic for markets and the economy?
Oh, definitely. I mean, don't forget that 70% of our economy is consumption. And if we don't re-up unemployment insurance benefits and checks, but particularly unemployment insurance benefits, the PPP program, which has been extended a bit, we're facing a cliff edge in terms of people having jobs and being able to spend. On top of that, I really hope we see something for state and local funding coming from the federal government. Without that, I think it would be very difficult to avoid a double dip recession. So fiscal policy really will make a difference here.
Megan Green of the Harvard Kennedy School. Megan, always fantastic to catch up with you. Thanks for joining us this morning. Appreciate your time. Lisa, this is the critical issue for the next 30 days. And to believe this administration won't do more, I think you've got to believe that this president is willing to risk his re-election campaign in November. Can you really see the President of the United States, and we can question whether these are the right motives, but can you really see the President of the United States jeopardizing his re-election campaign by not doing more to help this economy in the next 30 days?
Certainly the pressure is to do more, and we're seeing that from Republicans as well, even some who have pushed back on increasing the federal deficit. The question is, what form will it take, right? I mean, will they re-up the actual enhanced unemployment benefits? Will they tie it to re-employment? Will it be as effective next time around? These are some of the questions I'm looking at because, honestly, the form of this matters a lot, and it will likely change, John, going forward.
Next 30 days, Tom, absolutely critical. I think we're all in agreement about that. I'm not sure if a fiscal cliff is the right phrase to describe the next 30 days, but there's a lot of pressure on this administration to decide how they go forward. If you want the supply side stuff, the tax cuts, are you confident that's going to follow through and support this economy in enough time? Are you confident it might support markets? Maybe. Will it help everyday Americans immediately? I doubt it.
There is a grand tradition here, John. This president's no different than any other president. There's a lot of duress out there. There's no question, he's going to push for fiscal stimulus. And let's be honest, he's got a lot of company. I like, John, how you promoted your interview tomorrow with Robert Prince of Bridgewater. We need to talk about that through the show today, John. That will be an important recapitulation of what you and I did in Davos with him. And now, ever more so, we have the dampened economy that Bob Prince talked about.
The end of boom and bust as we know it. A man who made a lot of headlines back in Davos, Switzerland a couple of months ago, Tom. Feels like a lifetime ago now, doesn't it? I'm not sure this is the end of boom and bust as we know it that he expected, Tom. I think maybe this outcome is a little bit different.
Well, we'll have to see. If you got to bring up cash is trash. I mean, the mail's coming in already, John. You got to bring up cash is trash and get the Bridgewater view on that right now.
I will bring up all those issues. Don't worry about that, Tom Keene. We'll do that tomorrow at the Bloomberg Invest Conference. Looking forward to doing that for you all. From New York City this morning, good morning to you all. Alongside Tom Keene, together with Lisa Bravitz, I'm Jonathan Ferro, getting you in shape for the opening bell. A 1 hour and around about 50 minutes away with markets set up as follows. Elevated equity futures session highs up 27 points and positive around about 0.9%. Bond yields creeping higher as well. 8:30 Eastern, 50 minutes away on Bloomberg TV and on Bloomberg Radio. Exclusively sitting down, catching up with the St. Louis Fed President Jim Bullard on Bloomberg Radio and Bloomberg TV. This is Bloomberg Surveillance.
Now let's see what else is going on around the world. Here with the latest headlines is Amy Morris. Good morning, Amy.
Good morning, Tom. You guys were just talking about it. President Trump reportedly telling aides that he is in favor of mailing out another round of stimulus checks for Americans. The Washington Post is reporting the president believes that will help boost the economy and help his chances at re-election in November. Not everybody in the White House is on board. Some senior White House officials and leading congressional Republicans are skeptical of this. New polling from Real Clear Politics finds former Vice President Joe Biden with a lead over the president. It's grown to 9.5 points. A similar poll from 538 puts Biden ahead by 9.2 points. The major thrust of new coronavirus cases in the U.S. in the South and West, where officials say more young people are ignoring social distancing measures. New York Governor Andrew Cuomo says his state's numbers are on the decline. The difference is he says those states didn't reopen properly.
In New York, we did this differently than the other places, and you're seeing that it worked in New York. The other places basically did reopening as a political exercise.
The nation's health officials, meanwhile, preparing for a flu season complicated by a coronavirus pandemic. Federal health experts, including Drs. Anthony Fauci, Robert Redfield, and Stephen Hahn, will be testifying about this on Capitol Hill today, as the president is scheduled to visit Yuma, Arizona, to mark the completion of the 200th mile of the border wall between the U.S. and Mexico. Later, he'll address a group of young Republicans at a Phoenix megachurch, where event organizers say there will be thousands to attend. Live from the Bloomberg Interactive Broker Studios, this is Global News 24 hours a day on air and on Quick Take by Bloomberg. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
With the Bloomberg Business of Sports Report, I'm Charlie Pellet. Formula One has announced an initiative aimed at tackling racism and encouraging more diversity within the series. F1 said in a statement, quote, that We Race as One will also address issues surrounding inequality, sustainability, and the coronavirus pandemic, which has led to 4 F1 races being canceled and delayed the season start from mid-March to July. The NBA has firmed up the schedule for what will be a hectic
hectic time for teams this fall, deciding on October 16th as the date for this year's draft and saying clubs can begin talking to free agents 2 days later. It could be a wildly busy few days in October for the NBA if the schedule for the restarted season at the ESPN Worldwide of Sports complex at the Disney campus near Orlando goes as planned. Game 7 of the NBA Finals could be held on October 13th. And that's the Bloomberg Business of Sports Report. I'm Charlie Pellet.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Global news 24 hours.
For the friendships, for the fresh air, for the space to grow, for the knowledge, for the sport, for the outdoor education, for the wide horizons, for the academic excellence, for the future. Unleash your child's education at West Buckland School, a co-educational day and boarding school in beautiful North Devon. If you're moving to the southwest for a better quality of life, this is education without compromise, in what the Good Schools Guide called a gem of a school in an exceptional location. To see for yourself, find us at westbuckland.com.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath, or scoring extra poppadoms with your takeaway, or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage. Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
I think we're going to begin a recovery, certainly by year end. I don't think we'll be back to anything close to a normal economy until probably the second half of 2021.
Bill Ackman of Pershing Square, a lot of people sharing that view. It's going to take a lot of time to get back to normal. He was speaking at the Bloomberg Invest Conference from New York City this morning. Good morning to you all. Alongside Tom Keene, together with Lisa Brabitz, I'm Jonathan Ferro, getting you in shape for the market day this Tuesday morning, with equity futures nicely elevated, up 27 points on the S&P 500, positive 0.9% after getting absolutely whipsawed overnight by some trade comments from Peter Navarro saying it's over. Then the President of the United States saying the China-US Phase 1 trade deal is very much intact. That's the latest with the market. Here's the latest out of the United Kingdom on the reopening process. Prime Minister Boris Johnson, Tom Keene, making an announcement in the last 10 minutes or so. Now a 1 metre rule, a 1 metre plus rule allows more businesses to open. So you and I have to stay a metre apart if we go out and do things together.
John.
Tourism and hospitality in England can reopen July 4th. Hotel and campsites can also reopen in England. Unfortunately, Tom, for you, nightclubs, gyms, indoor pools, they will remain closed. That's if you can get into the UK and they do something about that quarantine sometime soon.
Yeah, I need to be cut and chiseled. John, why is the Prime Minister saying a meter? Doesn't Britain go by yards? Shouldn't it be like a yard?
No, Tom. We implemented that metric thing a while back. I think it's you that needs to do the same thing, maybe. Are you really throwing shade at the Brit about imperial and metric measurements?
I am.
When you still use imperial so much here?
We are, we'll do shillings and pence in a moment here. Right now, folks, and this is what we love to do at Bloomberg Surveillance. We're thrilled you're with us on our simulcast on Bloomberg Radio and Bloomberg Television. Why don't we actually talk to somebody with some experience in all this? Are we going back to the office? Darren Bulos with Deloitte. And what's important here is he's a mechanical engineer out of Madison. So if you said to him, we need to rebuild the floor by Tuesday, he's the one guy that could actually do it. Darren, what are offices going to do? I don't want a lot of mumbo jumbo about elevators. What are they going to do with the bodies on the floor to keep John, Lisa, and me apart?
Well, great to be with you this morning. As we've spoken to over 100 companies and financial institutions that are struggling with the return and wondering how they're going to bring these people back. First off, they're going to bring them back in waves. We've all heard that. It's going to be a slow progression back, starting with 5%, 10%, 20%. There will be social distancing in the workplace. Companies will either remove chairs from the floor, drape those chairs, tape those chairs off, and try to keep people socially distant. It's an imperative. And, how they do that in terms of other improvements that they're going to make to the workplace remains to be seen.
Yeah. Okay, well, let's go to Madison Economics, Wisconsin-Madison Economics, which is just not only the obvious dynamic, but it's a less obvious dynamic. People want to come back to the office. Are they going to want to, or are they going to be ordered to?
Well, we know that there are all types out there. There are some people that are absolutely going out of their minds working at home during this period. They can't wait to get back.
No.
And at the other end of the bell curve, there are those people that are doing quite fine at home, highly productive, enjoying not having to commute, and getting a lot more done. So there's everything in between. When companies start the return, I expect that there's going to be a lot in the middle. Companies or employees that are going to spend part of their work week in the office and part of their work week remote.
Darren, I'm wondering how expensive it's going to be for companies to outfit their offices in a way that does prevent people from getting sick. How much are you seeing this investment happening now at a time when it's unclear how many people will ultimately be returning to the office full time?
It's a great question. There definitely are going to be additional costs to operate the office during COVID times. Costs for nurses or medical professionals to take temperatures, day porters, elevator operators, signage, PPE. Our analysis suggests that this cost can translate to as much as $3,000 to $4,000 or even higher per returning employee to the office. If we imagine or realize that the total cost of occupancy in these high-rise buildings in downtown office markets in the United States are anywhere from $8,000 to $12,000 per worker, this could represent 30, 40, even up to 50% increase in occupancy costs during COVID times.
Darren, during COVID times being the operative phrase here, going forward, how much is this going to increase costs, and how much do you expect it to decrease the need for real estate as companies look to satellite offices or more permanent work from home situations?
Yeah, it's a great question. I think the COVID costs that I just mentioned would be certainly on a temporary basis during this pandemic management protocol that we're going to be operating under. It remains to be seen how many companies are actually going to adjust the footprint with hard costs, additional walls, different furniture, different layouts, which would be much more of an expense. If we can realize a quick resolution to the pandemic, I would expect many of the temporary costs to sunset, and then companies to be able to potentially redensify, go back to the old ways of working, if you will, with the exception that there will be a larger proportion of the workforce that would be working at home. If companies are able to redensify the footprint, if we can go back to shaking hands and socially be proximate to one another, I would expect that companies would need less space, less office space. There should be an opportunity for companies to take advantage of the additional 10 or 20 or 30% or more of their office employees that would be working remote and potentially use less square footage in the long term.
Darren Bulow, of Deloitte, a timely conversation of getting back to work. Darren, appreciate your time this morning. Thank you. Lisa, this is really, really important. I think for management in the C-suite, this is such a hard decision to make. Can you really make firm, permanent ideas with very, very long time frames about the future geographical, physical footprint of your company as we slowly make our way out of this pandemic? And I think it's too early to make those calls.
I would agree with you. There are a lot of people saying this shows that working from home is the answer for a lot of people. I don't know. The longer this goes on, how much creative energy gets destroyed? How much of the interpersonal relationships do we just have in the bank that we're using to kind of push forward? I don't know, John. To me, I think when kids go back to school, that is going to be the true test for how many people actually return to the office.
Yeah, I agree. I think the important phrase here as well, Tom, is to be nimble. Any real estate decision is a long-term decision. I don't know how many people are willing to make very long-term decisions about real estate just yet. I think remain nimble coming out of this still seems to be the preference of many people in the C-suite that we speak to.
That was a great interview with a mechanical engineer from Wisconsin. I love his phrase, John, redensify. John, I'm looking so forward to redensifying with you and Lisa sometime before Christmas.
A meter apart. You just stay a meter plus apart from me and I'll be a happy man, okay? From New York City this morning. Good morning. 10 yards. Redensify. Coming up on this program, St. Louis Fed President Jim Bullard, just around the corner on Bloomberg TV and Bloomberg Radio.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Tuesday afternoon by the scruff of the neck. Take this sunshine as an omen and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
At Honda, we've never looked to other car companies for inspiration. No, it's not a matter of an inflated ego. We just prefer listening to what people really need. For example, the new Honda Jazz Hybrid doesn't have the expected 6 airbags. It has 10, including one that prevents the driver and passenger from colliding with each other. And because we also listen to our conscience, all our safety features come as standard. No charge. Honda, the power of dreams.
When you're buying tech online and you want to make sure you get exactly what you need, would you rather talk to a robot or to someone called Robert or Chantel or Raj or Fiona or one of our other tech experts on Shop Live, Curry's PC World's online video call experience?
Hi, I'm Ali. How can I help?
Isn't it nice to get expert advice from another human being before you buy? They're just a click away. Curry's PC World. Talk to our tech experts online with Shop Live.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing, so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert, control the virus, save lives.
Get your cook on with Asda, with rollbacks on Hellman's Real Mayonnaise 705 grams was £2.75, now £2. And a 6-pack of Warburton Sandwich Thins was £1, now 75p. Wham bam, add your lunchtime ham. Find thousands of rollbacks across our stores. Asda. Selected stores and lines subject to availability. Offers end 1st of July.
The wait is over. Tonight, it's Leicester v Brighton and Tottenham v West Ham in 2 big games that could go either way. And with Now TV, you can watch both games live for just $9.99. Hold on, they're checking with VAR.
That's confirmed. It's $9.99.
Game on. So, grab a Now TV Sky Sports Day Pass. Search Now TV Sports. 18 plus, content streamed via internet. Full terms apply.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
To help keep you and your loved ones safe, TuneIn has the latest guidelines from the CDC. Cover coughs and sneezes with a tissue, then throw the tissue away. Avoid touching your eyes, nose, and mouth with unwashed hands. Disinfect surfaces, bottles, handles, knobs, and other places touched often. For the latest stories and updates on COVID-19, search coronavirus news on TuneIn.
Talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
What we need to realize is that, we're going to be in a slow growth world for a very long period of time.
Trade is very much on the back foot, and of course there's a lot of negative consequences that come from that.
We've come to a point where we realize that the economy and the virus have to coexist. We can't choose one or the other.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Bloomberg Surveillance, Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Thank you for being with us. It's simulcast on Bloomberg Radio and Bloomberg Television, and particularly, we welcome all of you across the nation. The regime changes that are out there in our medicine, the pandemic, in the markets, and of course, as we think about the American economy. James Bullard of St. Louis will join us here in a moment. What I'd really like to do, John Farrow, is talk about the regime changes that we see right now in the market. To me, it's a very, again, correlated lift up off of the Navarro uproar of 14 hours ago?
What a move overnight, whipsawed by Peter Navarro, who said that the China-US trade agreement was over, or at least it seemed he suggested it was. Then the President of the United States, his boss, coming out and correcting him. Tom, the confusion on that issue is absolutely massive over the last couple of weeks. And I think John Bolton's book over the last week or so has made things a little bit more interesting as well.
Yeah, there's no question about it. I know Lisa's almost 2/3 of the way through the book right now. John, one question which you are expert on. What is the great distinction between Lawrence Kudlow and Peter Navarro?
Lawrence Kudlow seems to have the president's thoughts very much in mind. And I think when I catch up with Larry Kudlow, he's speaking for the president quite often, and he doesn't want to speak out of line. So he'll avoid questions, and he'll keep to the script. Peter Navarro, I find, goes off on his own script sometimes, Tom, and I think that's why a lot of people find it confusing. Is he speaking for the president, or is he speaking for himself? I got the feeling overnight when he was speaking to Fox News, he was very much speaking for himself.
Lisa Abramowitz, we talk about, and the theme this hour for me, folks, again, is the colors, the shades of regime change, a great phrase invented by Dr. Bullard. I'll bring that up when we bring him in here in about 25 minutes. But Lisa Abramowitz, the regime change in the bond market to me is extraordinary. The separation of fully priced, full faith and credit versus the garbage of investment grade and particularly high yield. That gap is extraordinary, isn't it?
Yeah, and it has been collapsing a little bit, but I will say, Tom, I'm glad you brought this up because John pointed out yesterday that you have Apple borrowing for 5 years at less than 1%, and then you have American Airlines offering up a 12% coupon to borrow money short term. And there's a question here, right? Is this showing discretion? Is this healthy in debt markets, or does it show that companies that otherwise would already be bankrupt are able to borrow it all in the market? And I think that these two dueling narratives are definitely getting people's attention right now, Tom.
Okay. How do they do 12%? Who buys that? What lawyer says somebody at, a prospectus-driven institution can buy a 12% piece of paper?
Well, if you're going to get yield and you're actually going to get that 12%, it's a great time to do that and to buy it, because where else are you going to get that yield? The problem is, what is it secured by? It's secured by gates and airport lines. It's not necessarily that concrete. And there's a question, what's the air industry going to look like in a year, 2 years? This is 5-year paper. So to your point, what is the risk, Tom? And are people getting compensated with this coupon that makes it even more difficult for American Air to survive?
Well, the measuring of risk forward, and I really want to lay out, folks, what we're going to be doing here on Bloomberg Surveillance. We've got what we're doing this hour with Dr. Bullard, of course, and then John will go over on television to the open with some important conversations. I do want to highlight Bob Prince of Bridgewater with our John Farrow tomorrow. That will be the interview of the week, without question, for those living at the zero bound. Someone that has to put up with the zero bound is Jenna Barton. She is with the acclaimed firm Eaton Vance of Boston. Of course, they're notorious over the years for wonderful municipal bond work, but she works more in the growthiness or the lack of growth of the equity market. Jana, you are really, really focused not on Apple and Amazon and the others, but on things that have fallen by the wayside. What are you looking at right now that's fallen by the wayside?
Great to be with you. Well, I think you've correctly noted that the market, while being down 2.5%, there are a lot of companies that are down significantly more. Actually, the average stock is underperforming the broader market by over 700 basis points. And that's what we're focused on. Growth continues to be in limited supply. And if you're investing for the long term, this is the time to focus on communication services, consumer and healthcare companies that have lagged the market.
Jana, we've just seen the cyclical rotation over the last few months fade over the last few weeks. What do you make of that?
I think it just highlights the fragility of the market and any headline driving what could be perceived as long-term trend. I think we can all agree that much of the economic and social normalcy is predicated on vaccine or belief that there will be a vaccine. And while that is probably at least months away, I think this is the time to really focus on secular growth for the long term and perhaps tactically, sniffing out opportunities that could be cyclical. All equities are cyclical to a certain extent. So I think, again, healthcare, if I may flag that area of the market, while outperforming the S&P 500, it's mostly done that on the backs of biotech and life science names. And there are a dozen plus other companies that have lagged. So that's an area that we think plays into the cyclical and secular rally.
Well, Jana, let's build on this just a little bit, because if you say secular growth themes, some people reach almost immediately for mega cap growth in America. Where should they be looking?
There's plenty of growth, and while growth is in limited supply globally, I think when you focus on, again, areas of the market that are enabling the next wave of adoption, whether it's cloud computing and security that needs to be there, or infrastructure, when you think about healthcare, and we're talking about the whole ecosystem from med devices to specialties, again, companies that have lagged because of the burden on the hospitals as it relates to elective procedures that have been pretty much non-existent. That is where you're looking for growth. And longer term, they do remain in information technology, consumer, and comm services. What I will say is, on a cap-weighted basis, it looks like everything is up. But consumer discretionary, with the help of Amazon, is actually second best performing sector. But an average stock within the consumer space is actually down 20%. Again, consumer being hardest hit within the hotels and other areas of the market. So those are the anomalies that we would pay attention to.
Yeah, and I take your point about the underperforming stocks. However, in the past month or so, we've seen 97% of S&P 500 stocks trade above their 50-day moving averages, a measure of breadth, market breadth in this rally that is the most extreme, at least in a decade. How come this is not a sign that other people are doing the same thing you are, piling on the bandwagon without the evidence to really show that we're going to see the growth in those names?
Lisa, that's a fair point. I will remind everyone that the decline we experienced during the February and March timeframe was 3 times the norm. Again, we've seen the S&P 500 decline during that weeks in excess of 34%, and average stock actually declined almost 40%. So the recovery, albeit uneven, as you pointed out, is coming from very low levels. What's nice to see is actually more than half of the companies are outperforming the S&P 500. Again, on an equal weighted basis, that speaks to the healthiness of the market. Volatility has subsided as well, which is also a good sign.
Wonderful. Thanks for the brief. Yana Barton with us with Eaton Vance right now. As I mentioned, tomorrow, this will be must watch, must listen for Global Wall Street. Jonathan Farrell with Bob Prince. And John, what's so different is the dampening that Bob Prince predicted. It is here with a vengeance in central bank policy. But that doesn't mean, John, it's here in the actual market pricing, does it?
Tom, it's an unprecedented policy regime, and I think that's something Bob Prince and I will be discussing tomorrow. I don't want to give too much away on the interview, but I'll tell you where their thinking is at the moment, just in terms of where Bob is thinking at the moment. There is clearly a duration mismatch in the economy right now between what policymakers are trying to do, 2-3 month band-aids at a time, and the episodic duration of this particular shock, which could go on for 18 months. 1. 2, policy can offset income, it can't offset spending. Really think about that, that's important. Confidence there is absolutely critical. That's where you offset income, and then with confidence, the actors that receive that support start to spend. So that's 2, that's really important. 3, this is the most important point for me. An economy operating below capacity, absolutely critical and not given enough thought right now. So take the airlines. Lisa talked quite rightly about what American Airlines has got to pay up to borrow 5-year paper, almost 12%. Here's an airline business that is seeing sequential improvement off a really low base. Market laser focused on it. This is a severely impaired industry. The companies within it are taking on more debt. Borrowing costs are going up, they are not going down. Leverage is increasing, earnings has collapsed. Are you interested in the sequential growth? Are you trying to extrapolate that out into 21, 22? Do you think that industry can recover quickly without serious pain? It's the aftershocks from the big shock that I still don't think we've fully realized, Tom.
And, of course, we've seen this voiced by Mr. Dalio and, of course, by Mr. Prince, and we'll look for that interview tomorrow. But, Lisa, what this comes down to is the economic data still matters, including the Thursday jobless claim numbers. And you got to see, just for example, the unemployment rate in New York City at 18%. Where does that dynamic go, given this mismatch that we see in policy versus recovery?
Yeah, and I think that John said it really well with respect to the sort of second order effects that we have not seen yet. I'm wondering how much we're going to see the bankruptcies pick up eventually. How much have the Fed and Congress been able to prevent defaults, or are they just prolonging the cycle?
Equity futures this morning, guys, with a nice lift. We're up 31 on the S&P 500, advancing 1 full percentage point. Just to give you a flavour of the market action this morning, Tom talking about how intuitive things are right now. They are intuitive. Risk on, Treasury yields higher, bond yields up, the curve steeper. That's what we see on the screen in Treasuries, up 2 basis points on 10s to 0.72%. An important conversation coming up right here on Bloomberg Surveillance, 8:30 Eastern, around about 20 minutes away, worldwide on Bloomberg TV and on Bloomberg Radio. They're saying Lewis Fed President Jim Bullard coming up on Bloomberg Surveillance.
Now let's see what else is going on around the world. Here with the latest headlines is Amy Morris. Good morning, Amy.
Good morning, Tom. Coronavirus outbreak still a concern for several states. Texas Governor Greg Abbott says hospitalizations have doubled since May.
In the last 4 or 5 days, hospitalizations have averaged more than 3,200 a day.
In California, Governor Gavin Newsom says hospitalizations have passed the peak set in April.
Those that suggest this somehow is going to disappear, these numbers tell a very, very different and sobering story.
In Florida, Miami Mayor Francis Suarez is delaying reopening plans because of a surge in cases.
We're not going to be opening up nightclubs. We're not going to be opening up
movie theaters. We're not going to be opening up large venues.
Suarez and mayors of other cities in Miami-Dade County now mandating face masks in public. Trump administration health officials plan to tell lawmakers today their agencies are preparing for a flu season that will be complicated by the pandemic. The heads of the CDC and FDA, as well as Dr. Anthony Fauci from the National Institute of Allergy and Infectious Diseases, will testify to lawmakers that the duration of the pandemic is unknown and that a vaccine is not imminent. Real Clear Politics average of general election polls finds Joe Biden with a commanding lead, growing to 9.5 points. A similar polling average from 538 puts Biden ahead by 9.2 points, leading President Trump in every battleground state. Live from the Bloomberg Interactive Broker Studios, global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
Jenny Liss, Jewish communal leader and philanthropist, talks about why she chose the Jewish Communal Fund for her family's charitable giving.
For a lot of people, it would be the convenience factor. I don't have to track anything.
If charitable giving is an important part of your life, JCF can help you organize your philanthropy with our donor-advised fund. A fund can be established with a minimum tax-deductible contribution of $5,000. Make grants to your favorite charities, and JCF handles all the administration and reporting.
At the year end, our board awards community grants from fees and endowment income to UJ's annual campaign. We also make gifts to specific organizations, the elderly, Holocaust survivors, the hungry. The fact that we come together as a community at the end of the year to build community, that's what makes us different.
Get better at giving back. To find out more about JCF's impact, visit jcfny.org and download the Giving Report. JCF, we have a gift for giving.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Tuesday afternoon by the scruff of the neck. Take this sunshine as an omen and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath? Or scoring extra poppadoms with your takeaway? Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage? Yeah, that moment. Feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
You'll also see a big V in terms of the economy going up for the next few months because it's been closed. Not all things go up equally, and it will take quite a while before we sync up and get back to 2019 levels.
Steve Schwarzman of Blackstone on the sharp recovery, the sharp bounce you could see for a couple of months, and then the long road to a recovery that many people are expecting. From New York City this morning, good morning, to you all. Alongside Tom Keane, together with Lisa Bramis, I'm Jonathan Ferro, counting you down to the opening bell with equity futures session highs up 33 points on the S&P 500, up a little more than 1%. The story overnight, trade confusion. Peter Navarro making it sound like the phase one trade agreement was done, over, finished. The President of the United States pushing back against that, saying it was fully intact. That whipsawed equity futures. Layer on top, the President reportedly in the last 24 hours moving towards getting more checks into the hands of Americans, maybe and possibly in the next 30 days, though we still have no consensus on that from this White House. Yeah. In the bond market, Treasury yields are higher, the curve is steeper, up by 1 basis point on 10s to 0.72%. Tom Keane, just to round things out for you, the dollar weaker, the euro stronger, euro dollar up by several tenths of 1%.
And maybe the context there of Mr. Schwartzman's comments was more the square rootishness that we are talking about, John, with a little bit of a V and then the mystery forward. Right now, someone Washington loves to hate. What's known in Washington is you get a quick read, a quick little paragraph, a little snippet of the gossip out there, and the acclaimed Christopher Kruger of Cowen goes the other way. He writes hyper-detailed research notes that you swear at on a Friday evening because you know you're going to waste an hour and a half on Saturday reading them. Mr. Kruger joins us right now. Chris, I loved your research on unemployment dynamics in the swing states. To me, that's absolutely fascinating and speaks right to the fulcrum of this election. What do you see in those swing states right now?
Well, we saw those 6 key states, and the 6 are 3 in the Rust Belt, 3 in the Sun Belt. So you've got Arizona, Florida, Michigan, North Carolina, Pennsylvania, and Wisconsin. That's going to determine who's the president next year. Donald Trump won those states in 2016 by a little over 450,000 votes. And in the last 13 weeks, there have almost been 9 million unemployment claims.
Wow. I mean, that shows you the gradation here. Chris, what is the pandemic overlay on the history of 2016? How does a pandemic fold in to those 6 swing states?
Well, I mean, I think it's not just the unemployment numbers here. I mean, not to be morbid, but you also have, enormous death tolls here. What you've also seen, particularly in a state like Florida, which is an absolute must-win. If there's one state that Trump cannot afford to lose, it's Florida. And you're seeing now Joe Biden, above with the 538 aggregate poll numbers outside of the margin of error. What you're seeing in Florida is that absolutely vital 65 and older age cohort breaking against Trump towards the vice president. I think you have to, extrapolate that is a direct result of the pandemic and, sadly, those death totals.
Chris, how much does the employment issue suck the oxygen away from trade issues, which were so important in 2016 and will likely be very much on the forefront heading into November?
It's a great question. I mean, look, the Iowa caucuses were, less than 150 days ago, and the president was gearing up for a re-election campaign based on prosperity and security, with the China Phase 1 trade deal as a central sort of linchpin, to that re-election that was going to be delivered via the MAGA rallies. And now, I think that the Phase 1 deal, which you referenced to in the beginning of the show, has become a political vulnerability for the president. I think both the former vice president and President Trump are going to attempt to use China really as the ultimate bipartisan foil here. You have a very hawkish Congress with Hong Kong as probably the next big catalyst. Reports as well that new quote-unquote national security law might be implemented as early as July, not as September. So I think the China narrative is going to be is certainly going to stay with us through the fall. and longer.
It'll stay with us. It'll stay with us. The question is what the tenor of it will be and what the focus will be. There's a question about culpability. I know the Senate is holding a hearing on that later today. There's a question about tech supremacy. And then there's a question about increasing protectionism that we've seen and certainly was a major driver in 2016. How much is that still a major driver given the economic outcome of some of the policies put in place over the past 4 years?
I mean, I think it's really kind of it's gone. To paraphrase Spinal Tap, it's really gone to an 11. Before COVID, you had a bipartisan consensus that China was no longer a strategic partner. They were a strategic competitor, and you saw that with high tech, specifically with 5G. But you're going to see that later this month with new export controls. You saw that with Huawei. And you've seen that on some of the human rights issues. But now with the pandemic, you have folks like, Tom Cotton, Republican from Arkansas, Josh Hawley, Republican from Missouri, really making almost sort of a reparation-style push against the Chinese Communist Party for their culpability in the pandemic. So it's really sort of across the board. And then when you look at Vice President Biden, I mean, at the time, I thought it was a huge issue, but so much else was going on. Vice President Biden referred to Chairman Xi as a thug in the March Democratic primary. Democrats tend to look at China more through the prism of human rights, labor, and the environment. So it's a pretty tough forecast, really, regardless of who wins the presidency.
Chris Kruger, great to catch up with you, sir. Chris Kruger there of Cowen. Not the language that the former Vice President Tom Keene used when he was the Vice President.
No, there's no question about that. I just, what I was thinking, John, is any guest that we have that cites Spinal Tap definitely gets to come back. I mean, there's no question. We have to have Mr. Kruger.
I think Lisa feels the same way.
Citing
Lisa was happy with that reference too. Shall I get you some price action, get you up to speed ahead of the opening bell, up 33 on the S&P 500, up by a little more than 1%. In your equity market, we shift higher. Risk on this Tuesday morning. In the bond market, Treasury yields up. The curve is steeper as well. Your 10-year yield on a 10-year maturity in the Treasury market, up a basis point to 0.72%. 30 years advancing by 3 basis points. In foreign exchange, the euro stronger. The PMIs delivering a little bit of an upside surprise, still in the 40s, sub 50, still in contraction. They are getting less bad. Maybe that is your takeaway. The dollar is weaker against all of G10. Up next on this program, St. Louis Fed President Jim Bullard, live worldwide on Bloomberg TV, on Bloomberg Radio, alongside Tom Keene, together with Lisa Bravis. I'm Jonathan Ferro. This is Bloomberg Surveillance.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's Babbel.com.
NJIT, New Jersey Institute of Technology, makes innovation happen. NJIT faculty mentored Christoph Camacho when he was a student, helping him co-found a startup and patent a device that uses drone technology for reforestation and to collect valuable data for land management.
I founded Paratrees back in 2016, taking what I learned from my research at NJIT and migrating it to a startup. Our technology is to really enhance land management operations, so we work very closely with land management companies So we have a drone that performs precision reforestation, and we do storm damage assessment, having access to drones that can collect data so it's much faster. And what is more important, we help them drive management decisions. NJIT has been there every step of the way, going full force with my company.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is a Bloomberg Money Minute.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Tuesday afternoon by the scruff of the neck. Take this sunshine as an omen and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
At Halfords, we're here to get you where you want to be. Why not get road ready with a free car check worth £15 at all our stores and garages? With 25,000 weekly slots available at 700 locations, you can count on us to get you safely back on the road. Or even back beside the seaside. From MOTs to tyre fittings, there's no job too big or too small. Halfords, for life's journeys.
And action!
I was offered one.
Cut. That's not on the script.
I was offered one. Get you.
Ladies and gentlemen, I was offered one.
Come, boy. I was offered one.
Don't take our word for it. 9 out of 10 people said they were offered a great value deal with O2. Get yours today, in-store, online, or by phone.
I was offered one too. O2 Retail Exit Survey 309 of 348 agreed with the statement. O2 offered me a great value deal. For full verification, see o2.co.uk/terms.
From New York City, this is Bloomberg Surveillance. For our audience worldwide, we're live on Bloomberg Radio alongside Tom Keene, together with Lisa Abravitz. I'm Jonathan Farrow, counting it down to the opening bell, 60 minutes away. Futures with a lift. Equities up by 33 points on the S&P 500, positive a little more than 1%. Risk appetite improving through the morning as the session grows older. In the bond market, the curve steeper. Treasury yields just a little bit higher at the long end, up a basis point or two on 10s. On a 30-year, up 3 basis points. The 2-year, the elephant in the room here, Tom Keene, just an elephant sitting at the front end of the yield curve, and it's the Federal Reserve. Your 2-year, just 19 basis points.
The 2-year there, and of course, original policy right now. Time flies when you're rooting for the St. Louis Cardinals. It has been 12 years since Jim Bullard has held court in St. Louis. It has been an extraordinary set of opinions by Mr. Bullard over those 12 years. And of course, landmark was his, a number of years ago, discussion of regime change and what that means for the Fed. What can be said of every other president, every other governor, indeed of the various and sundry chairmen, nobody nailed the dot plot like Jim Bullard. What you see now in the lousy dot plot, and everybody knows my opinion on it, is right where Jim Bullard thought we would be, with some real worries of disinflation and deflation. Jim Bullard joins us today, the president of the St. Louis Fed. Jim Bullard, are we so messed up right now that we're finally, once and for all, going to shift to the targeting of nominal GDP instead of a real GDP analysis?
I've been an advocate, as you know, of nominal GDP targeting and its close cousin, price level targeting. The committee is still formulating about its framework review, and hopefully we'll get some statement out on that sometime during the rest of this year, but it's up to the chairman to drive that process.
Mr. Orphanides, a year ago, wrote a landmark paper, I believe in the Greenspan Fed, about the toolkits that are out there and the toolkits that are available. What does the Bullard and the Fed toolkit look right now? It seems like you've exhausted an awful lot of the useful tools.
I think there are other things we can still do, but we have deployed a lot of good tools for this situation. I think the policy response has been quite good to the pandemic, both on the monetary policy side, the liquidity programs, plus a good response from the political side to get fiscal relief to those that are disrupted by the pandemic. So I think all of this has actually gone, given the nature of the shock and the depth of the shock, this has all gone pretty well so far. And I think July 1st is a good checkpoint because I've long advocated that the main impact will be in the second quarter of 2020, and its third quarter will be kind of the opposite of the first quarter. First quarter is a big decline. Third quarter will be a big increase as many businesses come back online safely in a way that keeps the pandemic under control.
Jim, it's Jonathan here. I know the committee's thinking a little bit more about forward guidance. I caught up with President Mester and President Williams in the last month, and yield curve control was a bigger part of the conversation. Can you walk me through how you would characterize yield curve control from your perspective? Is that a complement to forward guidance, or is that something bolder where you cap yield to the longer end?
Yeah, the U.S. had yield curve control during World War II, and then after the war, the exit from the yield curve control was very difficult, so it kind of ended in tears. So I think that's one of the main concerns about going in this direction. Japan, as we know, has done yield curve control, but one of the things that they wanted to do was get out of the quantitative easing program. They've scaled that back dramatically by just targeting yields directly. So I think there are a lot more questions than answers around yield curve control right now.
What do you think the optimal approach to forward guidance is then, Jim?
Well, I think we're giving great forward guidance right now, and I think there's really no problem with where we are today. We're projecting low rates of, policy rate far out into the future. Longer-term yields are also quite low. Global yields are quite low. So, and we have the advantage in the current situation that we already built up credibility for low rates and commitments to low rates through the last crisis. In the last crisis, there was, as you might recall, coming out of that in 2010, 2011, 2012, the markets were always expecting that yields would leap back higher at any moment, and the committee tried to fight back against that and keep yields low by promising low rates further into the future. But in the end, we built up a lot of credibility that we really meant it, that we were going to keep rates low. And so this time, we have a lot of credibility on this issue, and I just think we're in great shape for right now because of the credibility we built up last time around.
Jim, the market definitely is buying that rates will remain low for a long time. Back in 2015, you raised the issue of asset bubbles that will come on the heels potentially of leaving rates so low for so long. Given how much corporate debt issuance we have seen, what's different now?
Yeah, I mean, bubbles is always an issue, and I do keep my eye on it. But again, I'm just not seeing things that are of the same magnitude as what happened in the late 1990s, the internet so-called .com bubble that blew up on us, and then the much more serious housing bubble in the mid-2000s that also blew up and turned into a global crisis. But I'm not seeing anything like that right now. We do watch it closely. I understand that companies are taking on debt. Some of that's, liquidity driven to get through the pandemic here. They're drawing on lines of credit and other sources to make sure that they can survive and thrive through a time of low revenue for their business. So, so far so good, but we'll certainly watch this closely.
Jim, are there no negative consequences then to keeping rates basically at zero for the indefinite future?
Yeah, there's always inflation risk lurking out there, but we haven't had an inflation problem in the U.S. or globally since longer than most of us can remember sitting here. So the problem has been on the low side and the threat of disinflation or deflation. On that score, I think we're also avoiding that risk, at least for now. I see TIPS break-evens moving back up in recent weeks, which seems to suggest that the committee retains credibility around its 2% inflation target, even though we've missed that target somewhat to the low side. It hasn't been as good as we wanted, but we have kept it, relatively close, and I think we'll be able to do that this time as well.
Jim, it's not the presence of bubbles that I think gets my attention. It's the absence of creative destruction. And I want to ask you an important question. Why the Fed seems to have lost confidence in the transformational powers of capitalism?
Well, you'll have to talk to others. I've not lost faith in the transformational powers of capitalism. I think what you're seeing today is tremendous adjustment by so many businesses to unwelcome development where we had this disease descend upon us. We've learned a lot about it in the last 90 days. We're figuring out how to run businesses, deliver goods and services in all kinds of nooks and crannies around the economy in ways that keep everybody healthy, keep the customer safe, keep the workers safe, and still, keep household incomes up and keep people employed. So I think we can be successful in this dimension. There are a few businesses where the pandemic is really throwing them a curveball, and they really have to hustle and roll up their sleeves in order to think about how they can deliver their product in this new environment. But for most businesses, I think they'll be up and running in the second half of the year.
Jim, I totally appreciate the motives of the Federal Reserve to do what the committee has done over the last couple of months, but I think we do need to talk about the consequences. Once you introduce a price-insensitive buyer into the credit market, you are interfering in the transformational powers of capitalism. You are stopping the money from flowing away from bad businesses to good ones. Do you not appreciate that, Jim?
No, I do, but I think the key question here is bad businesses. What do you mean by bad businesses? If they were viable and successful before the pandemic came, most of those I think are going to continue to be viable and successful in the world ahead, where we have to deal with the disease. There may be a few that don't manage to make that transition. I don't know. But the demand for those products is still there, and I would say for most firms, they want to maintain liquidity during the crisis here, and they'll be able to get back up and running with some changes to how they deliver goods and services in the second half.
We welcome all of you. Our extended conversation with Jim Bullard here on our simulcast on Bloomberg Television and Bloomberg Radio. He is the president of the St. Louis Fed and has been exceptionally acute in his research over his 12 years at the Fed of advancing not controversy, but just the argument of the moment. That argument of the moment, I have to revisit it, Dr. Bullard, is yield curve control. And what I find so distortive here is the Fed will make an action, the Fed will make a statement, there'll be a speech, there'll be some form of announcement, and you know better than anyone, the market will react to that. Can't the markets adapt to yield curve control and diffuse any benefit of it, diminish any benefit of it?
I do not think that the markets would undo what the Fed is trying to do. I think it's an equilibrium. I think we've enforced that equilibrium by trying to be more transparent about the debates and ideas that are going on the committee and the analysis. I think there's a lot of give and take between markets and policymakers, much different than it would have been in the very shrouded days of the 1980s, where he barely said anything, and markets had to infer what was going on. So I think that transparency is useful. I think we're wrestling with these ideas just like everyone else, but I think that it helps inform the equilibrium to be as transparent as possible.
But this. Extremely well said, Dr. Bullard. Now, we have Dr. Williams of the New York Fed and Governor Brainerd, and they've made some comments on the efficacy of yield caps. I look at you and others more circumspect as well. If we do yield curve control and we distribute that out the yield curve, and I don't know what year or month or day you're going to extend it out to, do we set ourselves up to be more vulnerable to any given exogenous shock?
I'm not sure about that. You'd have to, it kind of depends how you interpret the Japanese experience of the last few years.
Yes.
A few other countries that have tried this in the modern era. I just think, right now there are more questions than answers about this. And I don't really think this is a pending thing for the committee because we're already expecting rates to be low for quite a while. So I'm not sure that you need to put caps in or anything else. You've already got the low expected rates that you desire for this situation.
Well, very quickly, Dr. Bullard, what does yield curve control mean to retirees and savers in the St. Louis district?
Yeah, longstanding issue is that we should be thinking about the correct interest rates, not the lowest interest rates. And a lot of the discussion, popular discussion, always seems to assume lower rates are better. I think you do want to get to the equilibrium rate that makes sense for the current environment. But the current environment is one globally of very low rates all around the world, and that's the world we're living in. I think people have adjusted to that since it's been around since 2008, 2009.
President Bullard, a lot of questions coming through on the Bloomberg terminal that many people want to ask, including Mr. Gapin over at Barclays, who I think recognises what a lot of people pointed out after the last Fed decision in the dot plot, why the long-term dot was still at 250. President Bullard, why wasn't that adjusted? And do you anticipate it will be in the coming meetings?
Yeah, as you guys may remember, I don't put in a long-term dot. I'm the only guy that doesn't do it, so I'm a rebel, maybe without a cause here. But I don't think we know enough to put down that long-term dot, and it affects expectations and it affects thinking in markets. But it's also the object for which there is the most uncertainty. So I would prefer not to put down some kind of guess about where we're going to be 10 years from now. No one knows. And talk more about the relevant time horizon for monetary policy, which is probably about 2 years, possibly 3 years at the very most. So I'm the wrong guy to talk about the long run dot.
President Bullard, you are the right person to talk about inflation, and you said that the Fed does retain its credibility around a 2% inflation goal. Are we measuring inflation right, or should we be taking into account asset price inflation, the inflation in housing costs, the inflation in medical and education costs, and even food?
Yeah, great question. The measurement issues around inflation are very serious. It has been studied extensively, but if you really get into the issues about how to construct a price index, it gets very hairy very fast. And one thing I would just mention on this measurement issue for right now is that during the second quarter, you have a lot of goods that were really not traded, in the normal volumes that they would have been, or volumes went all the way to zero. So what should you do with those in the price index? Because they're always weighted by the shares of expenditure. Well, the share of expenditure went to zero. So are you not going to count those prices, or what are you going to do? Because you have markets that kind of shut down completely in that environment. So I think there are fascinating issues right now, just in the last few months, about how to interpret the inflation numbers. If you look at something like the Dallas Fed trim mean, which throws out the most extreme observations, it's still hanging right around 2%. And I think that's probably informing the market expectations about where they think we're going to end up with inflation.
Well, there's a question also about good inflation and bad inflation. A lot of people looking at the fact that wages are not increasing as quickly as some of these necessary costs that everybody faces on a regular basis. Are you seeing more bad inflation than good inflation, especially as there is this protectionist shift and people do bring supply chains back home?
Yeah, I think we were getting better wage growth before the pandemic. I think during the pandemic here, obviously we've asked people to stay at home, invest in the national health. We've asked businesses to temporarily shut down to invest in the national health. They've received probably somewhat inefficiently, but generally speaking, they have received relief from the federal government for their efforts to slow down the economy. So it's a little hard to measure wages or total income of households and businesses really during this time period. So I think we have to wait for the dust to settle. I think the third quarter will be a transition quarter. Like I said, I think most businesses will get back up and running and actually be close to the kind of production that they had previous to the pandemic. And then a few businesses will struggle more than that. But so far, so good. I actually think we're doing all right given the nature and size of this shock. I would say one other thing I just wanted to mention, and I don't know if you guys want to talk about it, but I actually think from a public policy point of view, we should not be emphasizing vaccines and therapeutics. I hope they happen, and God bless the people that are working on it. I think they're doing great work and everything, but these are tough scientific problems. And that affects, from my point of view, I'm the economics guy, that's affecting expectations and affects how people behave. So I think what you should tell people instead is we're going to have to manage the disease. We're going to have to manage the risk that's out there. It's unpleasant, but there's a new mortality risk, and businesses have to adapt. Households have to adapt. And everyone's doing that. We know that and we see that, but we shouldn't promise that there's some pot of gold at the end of the rainbow here.
President Bullard, that's exactly where I wanted to go, this idea that we have a very long road ahead of us. And there's a question about how resilient bank balance sheets are to deal with this. And it's something very much at the forefront of people's minds ahead of the stress test results that are coming out by the Federal Reserve later this week. Would you support having banks curb any dividend payments in order to shore up their balance sheets further ahead of whatever secondary effects, tertiary effects we can expect from the pandemic?
Yeah, this is a decision for the Board of Governors, so it's separate from the Open Market Committee, which I'm on, so it's not really my purview. I would comment, however, that I think markets have probably already priced this in. My sense is that the Europeans have already ended dividend payments, and markets probably expect something like that to happen in the U.S. But it's up to the governors to how they want to look at that. We've got the stress test results coming up shortly here, and I think that'll inform how the governors want to go on this going forward.
Jim Bullard, thank you so much. Very generous of you to be with us for this extended conversation. James Bullard is the president of the St. Louis Fed. Now we need to turn to someone with a wonderful perspective on this. This is what I love about Bloomberg surveillance. We can go from the acuity of Dr. Bullard to the acuity of Michael McKee, our chief economic correspondent. Michael, I thought there were some extraordinary moments in that conversation, none more than Dr. Bullard's comment that now there is a raging, visible debate at the Fed over yield curve control, where in times past, maybe that would have been less so. Color the debate over yield curve control.
Well, I think, Tom, you have to define the word raging. At the Fed, they don't really rage. It's a bunch of academics sitting around talking about the theories involved. They're trying to decide whether it's necessary, because you look right now at Fed funds futures and you look at the futures curve for treasuries, and it doesn't show any sign at the moment that we're going to see any kind of increase in rates anytime soon. Now, you may get a little backup if we start to see more economic activity, and then they have to decide, do they need to use that to push down on rates? The argument is that if you are using yield curve control, it can be cheaper because you don't have to spend a lot of money once you've promised to spend all the money in the world. The market won't challenge you. But the other argument is that at this point, you don't need to go that heavy at this point. You can use QE to try to adjust the curve. It'll be probably a game time decision when they see where the yield curve goes.
I'll agree with you. It'll be a game time decision. I like that idea, Michael. But what I find fascinating is the comparisons to countries so different than America. How does a central bank manipulate yield curve control with the complexities and diversities of our financial system and how open and sophisticated the U.S. economy is? It's not Japan, is it?
Well, it's not Japan, but it is Japan in the sense that both the United States and Japan can print their own currency. Europe would have a much tougher time with something like that because they can print their own currency, but they have many different bond markets. Here, the Fed can just go into the basement, essentially, and crank up the printing press, I'm speaking metaphorically, and promise that they'll spend as much money as possible to buy the bonds necessary to push down on whatever tenor they decide to. And then the market doesn't usually challenge them because the Fed can remain solvent longer than you can, to paraphrase the old phrase there. So it can work. The question is, do you really want to do that at this point, or need to?
Mike, I'm struck by this idea that the Fed seems to see the risk balance of keeping rates low and engaging in more bond purchases as squarely skewed in their favor. I don't hear much downside risk in what President Bullard had to say about keeping rates low for the indefinite future, nor, frankly, from expanding the balance sheet, as we heard yesterday when we were talking about this, that there doesn't seem to be that feeling that there's any risk here. Is that the consensus, that the Fed has ammunition to keep going with this without any detriment to markets or the future?
Well, I don't think it's without any detriment. Even Jay Powell has said that at some point it is a problem, but they don't see a problem anytime in the near future. Inflation's not showing any signs of rising. They're still fighting the deflationary impulses from this. And at this point, they're looking at the equity markets and saying they're not too bad. Obviously, there's going to be a question about what is too much, and the Fed's never been able to figure that out. Their philosophy has been we'll clean up the bubble after it bursts rather than try to keep it from falling. But if they step in to try to keep the equity markets from going too high, then maybe they clamp down on the economy, and they'd rather take the risk on the economy side right now.
Michael, we've got to let you go. As usual, when you come on air, the market lifts to stratospheric levels. And so we'll let Michael McKee go today. Futures up 32, Dow futures up 291. The Dow level 26,244. VIX in a big stick and a half, 30.29 as well. Lisa, really an extraordinary day, and I think a bit for the markets off the Navarro shock, a real surprise to this lift today.
Yeah, there's such a muddle of worry right now, given the trade tensions, given the virus counts, and that it's all being able to be pushed away, to be suppressed by the Fed stimulus and liquidity and the hope for additional congressional fiscal bailout money. I am just struck by that wall of money fighting the wall of worry and winning.
Well, I love that idea that you phrase it as a muddle, and that's clearly what we've seen, particularly in fixed income today. We will see. Thank you to Jim Bullard for the generous time this morning. We'll drive you informed to more important conversations this afternoon. David Rubenstein in celebration of Bloomberg Live in conversation with the Treasury Secretary of the United States, Mr. Mnuchin. That will be more than interesting. Again, leaving this hour, markets elevated nicely, and we'll get you to the market open across radio and television here in 30 minutes. This is Bloomberg. Good morning.
Business is
in line with government guidelines, face coverings are now compulsory on public transport. At Asda, you can get a 4-pack of Prima disposable face coverings for £2.80. Or a 2-pack of washable face coverings from £2.50. Asda, we're all in this together. Selected stores subject to availability.
The Mini Electric was raring to go until ready, set, stop. We hit the power down switch. We waited. But now it's time to start up again. We're ready with the Mini Electric and whole Mini range online. Showroom safety measures are set, and we're feeling good to go. Find your perfect Mini at mini.co.uk.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert. Control the virus. Save lives.
There's lots to discover when you join Tesco Mobile, like our big deals on big data SIMs, including our 8 gig SIM for just £10 a month. You'll also find great service with 99% UK network coverage. Visit us in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Ends 26th of the 7th, 12-month contract and unlock 4G enabled phone required. Phase policy applies 99% 4G population coverage indoors and outdoors across UK. Charges and terms at tescomobile.com/terms.
Buckle up, race fans.
NASCAR is back in the driver's seat.
And you can cut straight to the action here.
With the Performance Racing Network on TuneIn, you can hear PRN's live coverage of some of this year's top events.
As NASCAR's top drivers, Kevin Harvick,
Clint Boyer, and more get back on the track.
Search Performance Racing Network to listen and see upcoming races.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying to
standout stations and podcasts. Stay in touch with TuneIn.
Stay close to College Hoops Conversation with College Basketball Talk Podcast from NBC Sports. Join Rob Dowster and Bobby Reagan for weekly recaps of what's happening in every conference. Nostalgic flashbacks to classic games. And big picture discussions of the future of the sport.
Always knew was a legend, and you always knew was one of the great coaches because everyone always told you how great this coach was. But he never really reached point of either.
Search College Basketball Talk on TuneIn to listen.
First time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
Certainly, we've got to put a floor under the economic carnage.
Markets didn't believe the coronavirus would take down the world economy.
Finance.
The sellers are not necessarily finished, but quite exhausted.
Investment.
That's the reality that we have to settle ourselves to. This is the start of a depression.
We're going to have a bounce back when everything is open. The question is, what is the shape of the economy from there?
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good Tuesday morning from New York City and points beyond to our worldwide audience. Among conflicting statements, it does appear that the trade deal between the U.S. and China is still on. Futures point higher as trade concerns wane and as the market continues to reopen. Treasury yields, they're up modestly. Oil trades higher and gold once again moves higher. Let's get the latest on those equity futures with Bloomberg Stocks editor Dave Wilson. Dave, what are you looking at this morning?
Well, you got to look at Apple. The shares set a record yesterday as the iPhone maker began their annual Worldwide Developers Conference online this year. Analysts of Robert W. Baird, Deutsche Bank, and UBS all raised projections on Apple shares, and so you've got the stock up 1.5% in early trading, and that would mean we'll see another record today. You mentioned what's going on with oil. And the trade issue kind of going back and forth and sort of settling out for the moment. And all that adds up to gains for energy stocks in early trading. ExxonMobil up 1.5%, Occidental Petroleum up 2%, and in oil services, Schlumberger up 2%. The most active stock in early trading, though, American Airlines down about 7%. The carrier is selling $1 billion of common shares and another $1 billion of convertible notes. Now, both those sales were raised from $750 million. The stock sale is equivalent to about a 15% stake. And there's certainly some shares being sold at the moment. T-Mobile U.S. is down 1.5%. Japan's SoftBank Group is selling part of its stake in the wireless carrier as part of a $21 billion deal. Now, the terms of the agreement call for T-Mobile to sell shares itself and then turn around, take the proceeds, and buy back stock from SoftBank at the same price that it's getting from investors. So, bit of a complication there. Nonetheless, T-Mobile lower at the moment. Then there's Altice USA, up 0.5%. The cable company's former affiliate, Altice Europe, sold the last of its stake. Altice USA bought back about 20% of those shares for about $85 million. Some analyst calls of note. Nike's up 2.5%. Share price estimates for the athletic wear maker were raised at BTIG, Needham, and Susquehanna. All three firms with some version of a buy rating on Nike. Penske Automotive up 5%. The car dealer was raised to buy from hold at Benchmark. The firm cited indications of a recovery in business in the U.S. and the U.K. Cboe Global Markets, so down 2%. The securities exchange owner was cut to sell from neutral Goldman Sachs. Data compiled by Bloomberg shows Cboe now has 2 sell ratings for the first time in about 3.5 years. The other sell came from a firm called Autonomous Research. Spirit Aerosystems down 4%. Boeing directed the aircraft parts maker to reduce production of 737 MAX components for the third time this year. The latest cut will reduce Spirit's output of the plane's fuselage for the year by 42%. We should know Boeing's actually up about 1% in early trading. But you want to talk about a stock that's up today? It's Translate Bio. The ticker is TBIO. The stock's up 50.5%. The vaccine developer reached an expanded agreement with France's Sanofi to develop shots for COVID-19 and the flu. Terms of the deal call for Translate Bio to receive $425 million up front. Some of that coming from an investment by Sanofi in the company's shares. Translate Bio is going to get as much as $1.9 billion later, assuming things work out for them.
Biotech stocks, it's, red or, it's like red or black. It wins, it loses as the wheel spins around. The Trump, Dave Bloomberg stocks editor, Dave Wilson, thanks so much. Staying on the theme of drugs and COVID-19, the Trump administration is making a push to increase U.S.-based manufacturing of drugs and devices after shortages during the COVID-19 pandemic due to overseas productions. Let's get a sense of whether the U.S. is up to that. We welcome Bloomberg Law's Shira Stein. So, Shira, thanks so much for joining us here. It's been a long time since the U.S., healthcare business, pharmaceutical, medical devices has onshored a lot of that manufacturing. What's the status of that business today?
Yeah, over the last 30 years, we've seen companies move their operations more and more offshore due to financial reasons for the most part. But the Trump administration and lawmakers have been complaining about this for years, but it feels like this might actually be a moment where that changes. The administration awarded a $354 million contract to a corporation called Flow Corp to make generic drugs in the U.S. And there's an executive order floating around. It sounds there is a real concerted effort from them to do this.
All right. So what has to happen here? It seems like, again, like a lot of industries over the last 30, 40, 50 years, the manufacturing of certain products has been, sent to lower cost markets around the world, mostly in Asia, particularly in China. But what we saw in those early days of the pandemic was we couldn't get enough face masks. We couldn't get enough PPE. It seems like the incentive for the U.S. government to bring that stuff onshore is pretty high right now.
Yeah, absolutely. In addition to PPE, which we've heard a lot about, we had shortages of drugs that kept patients calm while they were on ventilators. We had shortages of drugs used for dialysis because we saw COVID patients who were having kidney problems. We've seen hundreds of drugs go on shortage during this pandemic. And I think the administration realizes that in future crises or public health emergencies, this could continue to be a problem if it's a nationwide pandemic or a worldwide pandemic.
So what incentives can the U.S. government provide? I'm not sure if the healthcare industry is saying, hey, listen, if you want us to manufacture these goods, whether they're PPE or pharmaceuticals, you have to provide us some incentives to do it in the U.S. Otherwise, it's just not economically viable for us. Are there things that maybe industry and the government are discussing right now?
Yeah, absolutely. I mean, like I mentioned, we had the Flow Corp contract where they gave them a $354 million grant. We could see the U.S. government investing in facilities. We've seen some of that with the use of the Defense Production Act, them providing funding to companies to retool their facilities. We could also see guaranteed government contracts with agencies that purchase drugs directly. HHS is also working on retooling the Strategic National Stockpile, and that would have manufacturers and medical supply distributors source supply. So all of those things combined could lead to manufacturers saying, yes, maybe it is financially worth it to do this.
Is that going to be, the timing of all those things? Sure, I think about the U.S. government, and I just think about red tape and time and, the duration it takes to kind of negotiate all those things. I'm actually thinking as soon as maybe the fall where there might be a resurgence of the virus and, the need right now to stockpile PPE, to stockpile drugs, to stockpile ventilators. Ventilators were such a big issue there for several weeks. What's the sense of timing?
Yeah, I mean, they've moved very quickly during the pandemic. So one of the other barriers could be getting FDA approval to move these production lines or to completely build a new factory. And the FDA did move really quickly. They allowed one company to move a production line in 3 days. They approved that in 3 days. That's not normal. Normally it takes months, 18 months to do something like that. So we could see it. We also saw some of these contracts move through really quickly. We just saw the DoD and the International Development Finance Corporation have an agreement yesterday to provide more funding around these sorts of issues. So it really depends on how much energy they want to do this. I think if we continue to have this as a public health emergency, they have these flexibilities in place where they can do this. The one problem that they might run into is trade issues. This could lead to the U.S., depending on which drugs they want to bring back to being manufactured in the U.S., it could lead to them needing to renegotiate trade agreements with other countries.
That sounds like another layer of uncertainty here. Is that something that, it seems like if I'm a U.S. pharmaceutical company, do I have to manufacture it somewhere else, or can I manufacture it in the U.S.?
They can choose to manufacture it in the U.S., but if the Trump administration phrases it a certain way that says, drug companies have to manufacture these certain drugs here, like is sort of outlined in the executive order, then that could run into trade agreement problems. But if it falls within some of the national security exceptions, they might be able to work around some of the trade issues.
Hey, Sherry, thanks so much for joining us. We really appreciate your thoughts and insights into this issue, because we're certainly going to probably rear its ugly head again, and maybe as soon as this fall or this winter, to the extent that there is a resurgence. Sherry Stein, she is a Bloomberg law reporter, bringing us up to date on kind of the healthcare manufacturing aspect of it, Tom. And, it's hopefully, we won't have to deal with it to the extent we did back in March and April, but there are concerns that, that there might be a resurgence to some extent. And then, how well prepared will we be once again in terms of PPE, hospitalization, equipment, all those types of things?
Yeah, we see it in the data this morning, and particularly on the Sunbelt states. Bloomberg surveillance this morning nationwide, brought to you by Resnick Advisory Assurance Tax. Are you applying for PPP loan forgiveness? Don't leave money on the table or fail. An SBA review. Visit CohnResnick.com/loan forgiveness. Let me say that again. CohnResnick.com/loan forgiveness. With our news in Washington, here's Amy Morris.
Thanks, Tom. The world's top men's tennis player has tested positive for the coronavirus. The announcement by Novak Djokovic brings to an end an exhibition tour in the Balkans that had been widely criticized for having few virus-related restrictions, including holding parties alongside the tournament. In a statement, Djokovic says he's sorry and that everything he did was with a pure heart and sincere intentions. The second presidential debate between Donald Trump and Joe Biden will be relocated to a performing arts center in Miami after the event's original host, the University of Michigan at Ann Arbor, pulled out because of concerns about the coronavirus pandemic. This as Miami's mayor, Francis Suarez, says they're delaying phase 3 of their reopening because of a surge in coronavirus cases.
We're not going to be opening up nightclubs. We're not going to be opening up movie theaters. We're not going to be opening up large venues.
Meanwhile, Trump administration health officials plan to tell lawmakers today their agencies are preparing for a flu season in the U.S. that will be complicated by the coronavirus pandemic. The heads of the CDC and FDA, as well as Dr. Anthony Fauci from the National Institute of Allergy and Infectious Diseases, will testify to lawmakers that the duration of the pandemic is unknown and that a vaccine is not imminent. President Trump is scheduled to visit Yuma, Arizona today. He'll be marking the completion of the 200th mile of the border wall between the U.S. and Mexico. Later, he'll address a group of young Republicans at a Phoenix megachurch, where event organizers have pledged thousands will attend. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg. Tom and Paul.
Amy, thanks so much. Paul Sweeney and Tom Keene to get you through the day with really attractive markets. This, of course, off the shock of what Peter Navarro said, and then he recanted on that rapidly, as did the president, looking towards some form of continued trade agreement with China. Futures up 28, Dow futures up 253. The VIX was in 0.8, maybe a stick, that's 1 point. Now it blows through. The VIX in 1.34 points, 30.43. That's a nice statistic. Not new strength, new calmness over the last number of weeks, but nevertheless really buttressed up against good numbers. 30.45, and again, Dow futures up 246, Standard & Poor's futures up 28 as well. I do want to mention oil elevated $41 a barrel, West Texas Intermediate, Brent crude, 43.31 a barrel. Please stay with us. A lot going on. This is Bloomberg.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing, LLC. Member FINRA, NYSE, SIPC.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's Babbel.com.
Influential conversation. At Honda, we believe in our ears. Listening can help solve some of life's biggest conundrums. For example, if a car breaks down and there's no one around to hear it, does it make a sound? The answer is yes. The new Jazz Hybrid will pinpoint your location automatically and send for help at the tap of a button. And with its personal assistant, you can find the answers to other conundrums like, where is a good vegan gluten-free pizza place with free parking? The new Honda Jazz. Hybrid and connected. Honda. The power of dreams. Connectivity subscription available in selected grades.
And action!
I was offered one.
Cut. That's not on the script.
I was offered one. Get it.
Ladies and gentlemen, I was offered one.
Come, boy.
I was offered one.
Don't take our word for it. 9 out of 10 people said they were offered a great value deal with O2. Get yours today, in-store, online, or by phone.
I was offered one too. O2 Retail Exit Survey 309 of 348 agreed with the statement. O2 offered me a great value deal. For full verification, see o2.co.uk/terms.
There's a reason flash storage is called flash storage and not electronic non-volatile computer memory storage. From quick and efficient data retrieval to instant scalability, everything about IBM flash storage is fast. It's also cloud-ready and surprisingly affordable, with a recommended monthly price of £310 for 24 terabytes of all flash. Order by the 30th of June and pay nothing for 90 days. Find out more at ibm.biz/flash offer.
24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are gaining ahead of data that's expected to show the U.S. economy extended its recovery from the virus-induced contraction as investors move on from a flare-up in China trade concerns that briefly roiled markets. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 27 points. Dow futures up 241. NASDAQ futures up 64. The DAX in Germany's up 2.5%. 10-year Treasury down 3/30 seconds. Yield 0.71%. Yield on the 2-year 0.18%. NYMEX crude oil is up 0.5% or 23 cents at $40.95 a barrel. COMEX gold is up 0.5% or $9.30 at $17.75.70 an ounce. The euro 1.1330 against the dollar. British pound 1.2487. And the yen is at 106.35. And that's a Bloomberg Business Flash. Tom and Paul.
Karen, thanks so much. Love those complete data checks from Karen Moscow. There are doctors that specialize. And, of course, there's always the awe over those that specialize in emergency medicine. And then there are those that are truly definitive in what we call the emergency room. And, of course, in the pandemic, he has been front and center. Eric Toner is borderline legendary in emergency medicine from coast to coast. He is at the Johns Hopkins Center for Health and Security. Here is a conversation with Dr. Toner.
Well, this virus is spreading in the states that opened up their economies early and aggressively. And so we've been seeing case rises since about Memorial Day, as one would expect, with more interaction between people. And I expect that this will continue. We'll see more states, as nearly all the states now have opened up to some extent. We will see more cases. And I fear that in some of these cases, particularly in the South, we will see very dramatic rises. You should know that in some of the counties in the South, they are seeing per capita levels of cases and deaths that are as high or higher than New York City saw at its peak.
Dr. Toner, if that's the case, we need to go to something that I think is a mystery for a lot of people, which is the effect of the virus on healthy younger people. What is the update on what the virus does to those younger who feel they're immune?
Yeah, so this is one of the paradoxical things. Most young, healthy people tolerate the virus quite well. They have a mild illness. It's not universal. Some have severe illness, but most have mild illness. But they can become the major carriers and transmitters of the virus. So whereas it's true that right now we are seeing many new cases being young people, in next and subsequent generations of transmission as they spread it to other people, it will be spreading amongst the entire population. Well, you'll see it more in middle-aged and elderly people as well. So this is ominous.
Dr. Toner, are we going to see a big resurgence as we get into our winter? So is fall a critical moment, and what can hospitals do now to prepare for that?
I think it's a mistake to expect a fall wave. The subsequent wave is happening now. It's going to be a summer wave, if we want to talk about waves. These cases are rising now. The U.S., on a national basis, is nearly back to where we were in April in terms of total cases. We're back up to over 30,000 new cases per day. So we don't have to wait till the fall. The new resurgence is happening now. And hospitals who haven't gotten ready really need to get ready. You know, there is no time to spare. Many of these hospitals, many of these counties that are now being affected have limited resources. They don't have the resources of New York City. And so they're in quite a vulnerable situation.
Dr. Toner, when you look at, any good news out there, is there anything that gives you hope, either that we find a vaccine sooner than expected or that actually people that have contracted a coronavirus can't recatch it?
Well, my hope is that what we've seen that gives me hope is that the measures that we use to decrease transmission, that is wearing masks, maintaining distance, avoiding crowds, these things really worked. They worked dramatically well so far. It's how we made the outbreak in New York not so catastrophic, and it's how we tamped down the curve everywhere else. So if everybody wears masks and everybody maintains distance and avoids crowds, even with reopening the economy, we should be able to maintain some control over this virus, particularly if we are doing widespread testing and widespread contact tracing. I do believe that it's possible to keep control of this virus. It does not have to get back to what it was like in New York. But I'm afraid that if people don't wear masks and don't maintain distance, we could end up back like we were 6 weeks or 8 weeks ago.
That was a difficult conversation. Eric Toner, the Johns Hopkins Center for Health Security, and a senior scholar, and I can assure you folks that is not the gloomiest poll, but the most acute reality of where we are right now of any single expert we've spoken to.
Yeah, Tom, and it's really timely as it relates to economies opening up, even in New York City. Tom, as you well know, restaurants starting to open up for outdoor dining. I was down the Jersey Shore this weekend, and I did not see the mask wearing that I would like to see down there. In the outdoor bars and restaurants at the beach. So it's going to be a challenge here for people.
My observation yesterday, Paul, and we celebrated the opening of New York City and went out, and I was unprepared, Paul, for how empty Midtown Manhattan was.
People still very cautious.
I just blew it. Folks, sometimes Tom Keene's wrong. It's hard to believe, but Paul got it wrong. I mean, it was empty. And, we spoke to Mr. Boozley from Deloitte today, a mechanical engineer and office development and all that, and he just said, it's one part, when are you going to open offices? And the other part is, do the employees, particularly service sector based, do they want to come back? When do they want to come back to the offices? And boy, it just hit me full face yesterday. It was something.
Yeah, it's interesting, Tom. I mean, you think about a city like New York or other, major urban centers that rely upon mass transportation. I think that's going to be the gating issue. When do people want to get on the Long Island Railroad or Metro North or New Jersey Transit to come into the city and then totally get onto the subway system?
We thank Patrick Foy for joining us, the head of the MTA, who's really been wonderful in giving us perspective across their huge platforms of transportation. We've got lots more to talk about. I want to be sure in the next half hour to talk to Paul Sweeney, folks, about the Apple confab yesterday. He hung on every single word.
It's amazing. It's the first virtual of these, product and events that they've had here, but they're trying to, really say that the future is 5G. We're bringing more of the chip manufacturing in-house, so we're going to have more control over our supply chain, and those are some of the things. But, people are waiting for, kind of the next big thing coming out of Apple.
Well, maybe it's today. I mean, they do it again today, right?
Yeah, 3 days.
3 days, maybe there'll be some bombshell announcement in there as well. Our announcement is futures up 23, Dow futures up 202. Those levels 31 and 34 on SPX Dow 26,153, and the VIX is sprightly 30.49, 30.49. This is Bloomberg. Good morning.
Debbie Hart is president of BioNJ, which represents the interests of more than 400 New Jersey-based biotech companies. She's also a strong voice in the biotech sector, supporting research universities like New Jersey Institute of Technology. She sees NJIT as a valuable partner in attracting venture capital and biotech startups to the Garden State.
So the number one reason that companies come here to New Jersey for the biotech industry is for our talent. We estimate that there were about 30 biotech companies in the early 90s in New Jersey, about 80 in 1998. Today there are more than 400. And that growth continues, and it's come from every possible angle. Other countries, other states, They've spun out of our academic institutions as well as our biotech and our pharma companies, and we expect that growth to continue long into the future. And NJIT is a pipeline for talent, for companies, for entrepreneurs to do that important work.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
President of the Jewish Communal Fund, Zoya Raines, and her husband Robert Friedman, Jewish activists and philanthropists, talk about why they chose the Jewish Communal Fund for their charitable giving.
As very busy working parents, we wanted to focus more on the charity part of it and wanted to focus more on our children and less on the administration.
The Jewish Communal Fund is one of the oldest and largest donor-advised funds, but at the same time, they're totally up to date and have state-of-the-art systems for us to access and manage our contributions online. The assets in our fund at the JCF grow tax-free, so we can generate more charitable dollars to support the charities that we care about most.
Let JCF minimize your taxes and maximize your charitable giving.
We're incredibly passionate about our charity, and the JCF allows us to focus more on the charity and less on the administration and the headaches.
For more information about Jewish Communal Fund, visit our website at jcfny.org and request a new fund kit.
This is different adapts, different overcomes, different keeps moving, different keeps thinking, different stays connected, different never stops dreaming. The University of Northampton invites you to a virtual open day for a taste of all the benefits of studying with us from this September. Search University of Northampton Virtual Open Days. It's the future, but different.
I was offered one.
I was offered one. Were you?
Yeah, I was offered one too.
1 2 1 2. I was offered one.
I was offered one.
Don't take our word for it. 9 out of 10 people said they were offered a great value deal with O2. Get yours today, in-store, online, or by phone.
I was offered one too. O2 Retail Exit Survey 309 of 348 agreed with the statement. O2 offered me a great value deal. For full verification, see o2.co.uk/terms.
At Honda, we believe in our ears. Listening can help solve some of life's biggest conundrums. For example, if a car breaks down and there's no one around to hear it, does it make a sound? The answer is yes. The new Jazz Hybrid will pinpoint your location automatically and send for help at the tap of a button. And with its personal assistant, you can find the answers to other conundrums like, where is a good vegan gluten-free pizza place with free parking? The new Honda Jazz. Hybrid and connected. Honda. The power of dreams. Connectivity subscription available in selected grades.
There's a reason flash storage is called flash storage and not electronic non-volatile computer memory storage. From quick and efficient data retrieval to instant scalability, everything about IBM flash storage is fast. It's also cloud-ready and surprisingly affordable, with a recommended monthly price of £310 for 24 terabytes of all flash. Order by the 30th of June and pay nothing for 90 days. Find out more at ibm.biz/flash offer.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
Good morning. I'm Karen Moscow, along with Tom Keene and Paul Sweeney. And the opening bell brought to you by SEI, with an operating platform designed to support all major asset classes, diverse strategies, and investment vehicles. SEI is redefining wealth management. Learn more at SEIC.com/IMS. And the S&P 500 is higher at the open, up 0.8% or 25 points at 3143. Dow Jones Industrial Average up 0.9% or 236 points at 26,262. And the Nasdaq is up 0.7% or 74 points at 10,130. The 10-year Treasury down 3/30 seconds. The yield 0.71%. The yield on the 2-year 0.18%. NYMEX crude oil is up 0.9% or 36 cents at 41.09 a barrel. COMEX gold is up 0.7% or $12.40 at $17.79 an ounce. The euro 1.1323 against the dollar, and the yen is at 106.38. Tom and Paul.
Thanks so much. Greatly appreciate it, Karen Moscow. Right now, Barry Ritholtz with us with a wonderful book out on the financial crisis a number of years ago. That movie was extraordinary with DiCaprio. also writing for Bloomberg Opinion, and just really quite good at melding together what to do and, just as importantly, what not to do. Here now begins a lecture on the value trap. Barry, I have had so many equity strategists, buy-side people say, I really can't buy Amazon, I can't buy Apple and the other 7 glory stocks, so I'm going to go out and find something undervalued that hasn't moved. And you can subdivide that group into about 6 groups, and one of them is the value trap, where you go, wow, that looks good, and you wait, and you wait, and you wait. Barry's still waiting on some of the value traps of 1985. Barry, what do you do with a value trap?
So it's first of all, I love the question. It's so interesting, and it touches on so many fascinating aspects of investing. And I'm going to step way back and give you the really big picture view, and it's we have a fundamental misunderstanding of what fair value is. I think investors of all stripes, not just value investors, think from their real life, from their everyday life, hey, sometimes things are cheap, sometimes things are expensive. If I buy cheap things in general, I tend to do better than when I chase and overpay and buy expensive things. The problem with the value trap, as you're describing it, is there's a tendency to misunderstand the difference between things that were once more expensive and are now cheap and things that are a good value. When Lehman plummeted, when Bear Stearns plummeted, there's a big difference between something that costs much less than it used to and something that is inappropriately inexpensive. And people confuse the two.
So what's the best way to think, if I wanted to go and say, I want to be a successful value investor, am I trying to find it doesn't really matter the multiple, it's just more the multiple relative to the forecasted growth rate that I find an attractive valuation?
It's much more complicated than that. First, if you're buying value stocks as a class, if you're buying a mutual fund or an ETF, they go through very long periods of time when they underperform growth. In fact, we are in the midst of one of the longest periods of underperformance and of value versus growth, and that has led to a lot of hand-wringing and questions of, is value as a factor dead? Have we misunderstood this for the past century?
Barry, I think you're nailing this. And the bottom line is what good value are stocks that should be growth stocks, but they're not growth stocks because they're not growing, so we call them value stocks. So how do you parse out value stocks that have growth or growth potential? That's the heart of the matter, isn't it?
Yes, and it's much more complicated than people realize.
I agree.
Because first, you have to recognize, hey, what is changing in the world? What is changing in the economy and within various aspects of business that is this model still attractive? Hey, you know what? The steam engine and leather belt companies became very cheap when we started moving towards electricity and internal combustion engines, but they became cheap for a reason, and it wasn't because it was a great value. Their models were dying, and we've seen that. Yeah. What's taken place across so much old media and failing to keep up with the change in internet communications.
I mean, Paul, you in full disclosure, Paul's a little modest about what he is and what he's accomplished, folks. Paul, you pioneered this within media securities analysis, which is the revenue dynamic is everything. I mean, Colbert's growthiness comes from, as Barry says, the new technology that drives revenue growth. Do you see that out there now, Paul? Besides the 6 anointed stocks?
Exactly. You're right, Tom. I mean, when you think about the growth investing, it seems like the market has, migrated a little bit. It doesn't necessarily have to be earnings growth. It can be revenue growth. And I think the greatest example, and Barry, you lived through this, is Amazon. There's a company that had tremendous top line growth for 10, 15 years, but little to no earnings at all whatsoever. Yet the stock powered on. It seemed like investors, again, as Tom was suggesting, focus more on that top line growth.
Yeah, for sure. And let me remind everybody that when Amazon went public, was it 97? The first shareholder letter from Bezos, it might even have been in their S1 filing before they went public, specifically said, we have big plans for the company. We are not going to be profitable for a long, long time because we're going to continually reinvest, and we have an opportunity to take market share in industries that haven't even been created.
You know, and what's important here, Paul, Barry was being too polite because Barry remembers when I bought it at 2, made out like a bandit, and I unloaded at 10. That worked out.
Hey, that was a 5-bagger, Tom. That was a big win.
It was a 5-bagger. I got out large at $10, split adjusted or anything.
But it's interesting, you know, in today's market, think about some of those 2019 IPOs. Barry, you know, that I remember Uber in particular was trying to emulate and I think they even on the roadshow said that we're kind of like Uber we're kind of like Amazon in that we're going to bring this sharing component, this sharing business model, not just to ride sharing, but to food delivery and other aspects of the business. And they didn't quite get the benefit of the doubt.
Well, it's also that you had some corporate leadership issues there, you know, and there were some problems with how much venture capital money they had been spending and how much they were subsidizing things. Was this a credible business model? You know, people forget a company that is working well and growing top-line revenues and taking market share and has a path to profitability. That is a rare and beautiful thing when something is sustainable. Look at Microsoft, which has embedded itself into the enterprise literally for 3 decades now. That is one of these sustainable models that for a long time people just were unable to wrap their heads around just how successful they were. Even Steve Ballmer, as hard as he tried, could not kill the money juggernaut that was Microsoft. And under the new leadership, under Satya Nadella, Microsoft has bloomed anew, and they are really emphasizing their strengths. That's a classic example of not a value trap.
Barry Ritholtz, what are you buying right now? I mean, it's been an extraordinary pandemic. We go down, down, down. We come back. Even today, you know, we're grinding higher and all that, folks. But, Barry, what are you comfortable acquiring right now?
So I continue to look around the world and see a lot of opportunities, with the caveat that, you know, stocks aren't the cheapest they've been, and you should reduce your expectations for future returns by 1% or 2. The United States still is the cleanest shirt in the hamper by far and away. As much political divisiveness and as much as we're not doing a great job dealing with the pandemic, look, just compare the U.S. to the EU. The machinery that drives the U.S. economy is still, if not running with all cylinders, still running pretty well. If you are concerned about inflation, well, having a couple of percent of gold in your portfolio isn't the worst thing at this point. It's really a hedge because you're seeing so little returns from bonds. And lastly, if you're a glutton for punishment, if you're a little bit of a masochist, small cap value has never been uglier and it's never been cheaper. And if you believe in value and you don't mind people making fun of you for the next couple of quarters or years, that has never been cheaper than before. And if it works out, it'll be a home run. And if it doesn't work out, it means that value is dead.
Barry Ritholtz, thank you so much. We've come full circle there from value tap to value trap. Small cap value. Mr. Ritholtz writing for Bloomberg Opinion. Let me do a quick data check here before we get to the news. Excuse me. Dow up 274 points, 26,300. SPX up 30 points, 31.47. The VIX comes in nicely, 30.58 on the VIX. That's a really good number given some of the tensions of the last number of days. I do want to point out, as Mr. Ritholtz was touting, gold $17.79 the ounce. Paul Sweeney buying at $800 the ounce like a bandit.
Thanks to Michael Malone from Bloomberg Intelligence, pushing gold for a long time.
West Texas, 41 a barrel. Brent crude, 43.46. With our news in Washington, here's Amy Morris.
Thank you, Tom. Coronavirus outbreaks concerning officials in several states. Texas Governor Greg Abbott says hospitalizations have doubled since May.
In the last 4 or 5 days, hospitalizations have averaged more than 3,200 a day.
In California, Governor Gavin Newsom says hospitalizations